Hi, everybody. I'm Bobby.
I'm Brian.
And I'm Paul.
And we are Support and Resistance. And so, so we're here to bring, the fundamental and technical analysis of the crypto market so you guys can also become a crypto insider yourself. Each week, myself, Brian, and Paul, we're going to discuss, the latest news, talk about the latest charts, giving you our thoughts and opinions on whether we support or resist, what is being discussed. Sometimes we're all going to agree, sometimes we're not, but in the day, we're all friends here. And we're trying to give our opinions of what is happening in the most objective, data-driven way. So with that said, I'm going to hand over to Paul to talk about predictions from last week.
Awesome. Hey, thanks for that. So our predictions. Last week was interesting because I think we were...
I'm going to put my arms up now.
What was that?
I'm putting my arms up now.
Oh, come on. Don't even... Did you call it again?
Yep, third week in a row.
How is that possible?
I've been doing this for 20 years.
Oh, okay. That's unfair. That's it. We're going to cancel you out of the competition. You can't participate anymore.
No, it was a good call. I mean, it could go either way.
We should give everybody a little background on what these predictions are.
Right.
All right, go for it.
Yeah. So I think last week my prediction was the fact that we were going to sort of trade sideways, that we would not drop below 5,000. So actually, I think I was pretty much on the spot too, because we didn't drop back below 5,000, and we traded sideways, and we're on our way back up. So I think I qualify to be right there with you.
Okay.
And yours was again 5,700 again, was it?
No, I said that we would get a little bit of a bump back above 5,400. And then likely I would like to see it go to 5,700, but I didn't think it was going to. Yeah. So we got just above 5,400. I know it's not a big call, but at least it didn't drop. Because I was saying the 233 exponential moving average was still going to hold this key support, which it didn't even get down there. So I like the win. I'll take the win for the third week. I'm taking them while I can because I know there's going to be a stretch that I'm not going to have them.
Oh, cool.
So... But let me tell you what I've been doing the last couple of days, just before we get into this.
All right.
I live in Louisville, and it's all about the Derby. And I've been at it for the last 2 days on this Kentucky Derby, trying to analyze the market or the horses, all that kind of stuff, because we put out a publication at work that deals with all this. After all of my analysis, I just want to throw this out real quick. The favorites have won the last 5 years in a row, and about the time that they changed the system on how to get the horses into the race, they used to go by earnings, like the amount of earnings that they would get, and then that would qualify them to get in. Mm-hmm. But based on my analysis that what I'm looking at, they started on a point system, which is based on the distance that the horses race. So it leaves out all these other horses that race like 6 furlongs, 7 furlongs, all this. It kind of knocks out of that field because they don't gain any points on these other types of races. So my theory is all these horses that get points based on the distance that you're running is the only ones that make it into this race now, because it kind of gets rid of a whole bunch of other ones. So if you're the kick-ass top dog in the point system that races at that distance, and you've already kind of beat everybody else in points and based on, it's sort of like QB ratings and all that kind of stuff. They put all this data in. So if you lead that, you have a pretty high probability that the favorite's going to win the race. So that's been happening in the last 5 years. So I'm hoping it breaks that streak, because it gets kind of boring when the favorite wins. Everybody wants the 50-1 shot, make some money, So that's my theory. That's why I've been kind of going over the last couple of days. So I just want to kind of throw that out there as a little non-crypto news that I've been looking at. But my value play, and I'm going to put it out here on the screen, my value play is coming out of the one, War of Will. It's a 20-1 shot on the morning line, and I really like the value of that horse. So it is a race, so anything can happen.
I see Socrates taking notes too.
Why not? The War of Will is my value play. So if you want to play for the money, for something weird to happen, that's a really good horse to watch coming out of the one hole. So that I'm putting it out there live. Everybody's going to know my call, so I can't hide from it now. So that's what I've been doing.
I like it.
Just want to kind of throw that out there. So now that I can shut up, let's introduce our guest there, Bobby.
Yeah, so we are super excited to have another A-list guest on our show. Goes by the name of Socrates. And Socrates, I've tried to do a lot of Googling, trying to find out a little bit more about you, but it's hard to find that information. So literally all I know, and I think a lot of what we know about you, is you're former philosophy student, former professional poker player, former insurance agent, and now a financial revolutionary or revolution prepper. So with that said, is there anything that you would like to kind of share with our audience so that we can get to know you a little bit better? And I'm going to hand it over to you.
Absolutely. Well, I sure appreciate you having me on. I'm just getting ready to crack open a Montucky cold snack for.
There we go.
Wait. What is that again? A
Montucky cold snack. Montucky cold snack. Unofficial beer of Montana. One of my favorites.
Okay.
I like it. All right.
So,
yeah, me too.
Getting that cracked open. We've got a lovely evening here in the Rocky Mountains. I sure appreciate you guys having me on. I've have watched the show in the past. I think you guys put out a great product, and I'm very happy to see that you're already gaining some exposure. So I really appreciate you having me on. This will be awesome. So just a little bit of background about myself. I studied philosophy in college, and I dropped out in 2010 to play poker for a living. That was going well. My plan of action was I was going to make enough money playing poker so that I could fund a trading bankroll, and I was hoping to kind of parlay some poker success into trading. So I started teaching myself how to trade in about 2011, and that went how a lot of people start, not necessarily how I was wanting to go. I became so frustrated that I eventually submitted to the buy and hold philosophy, thinking that it's just impossible to beat these banks. These technical indicators are all bullshit, yada, yada, yada. So that even led me into getting into the insurance and financial advice. I decided that I might as well go help other people set money aside and just buy and hold into an IRA, selling annuities and mutual funds, and then cross-selling some insurance as well. Did that for about 5 years, had my own agency for 4 years, and was successful and was doing good, but started getting back into Bitcoin about 2013. I am different from a lot of people in the sense that what got me into Bitcoin was using it opposed to speculating on it. Around that time were the first online poker sites that were offering Bitcoin deposits and withdrawals. So I remember seeing that on a forum one day and decided to put some money into Bitcoin, send it right over to a poker website to withdraw, and that kind of just got my toes wet in the using Bitcoin, and ever since then into trading, and have been doing that full time since October of 2017 now.
Fantastic. Yeah.
Awesome.
That's a great background, huh?
Yeah.
Very unique. Yeah.
Well, welcome.
Oh.
Thank you very much.
When you say Rocky Mountains, that's one of my favorite states. I visit there at least once a year, maybe every 2 years for sure. So I'm going to be there.
Right?
I'm going to be there in June, hiking those mountains, man.
Well, you'll have to look me up. I certainly am a big fan of this area, and absolutely love it. It's quite a treat to be able to live here.
Yeah, it's awesome. That's awesome. Well, welcome.
So Brian, are you drinking some classic Kentucky whiskey there? Or
hey, I got some Angel's Envy here. I got a little bit down because the market was we bought a little bit in December. We bought a little bit in February. I'm waiting for that other buy. I haven't got another buy in yet, so we still got a half a bottle to go.
Right. Dollar cost averaging the whiskey.
Yeah, exactly.
I've just been stressed with moving states, and so my life is just in boxes. I'm trying to, get my energy back into center. So I'm drinking some kombucha.
Nice.
Not as exciting as you guys, but that's what I'm drinking. So
well, I'm drinking water, even boring. So I'm the last at the bottom of the barrel. So
I see some kind of coffee in the background there, though.
That is, folks, listen, this is key to a super coffee. This is the stuff that jazzes me up in the morning. When I get up, I drink this, I'm ready to rock and roll.
Awesome.
All right.
All right, well, let's hit some news.
Yeah. Bobby?
Me.
Yeah.
I'm the news.
Yeah, you can start off. I think there was some interesting news from Mr. Barry Silbert that you want to.
Oh, Drop Gold by Bitcoin. Yeah. So Socrates, did you see that ad by chance?
I did not know.
Okay. Yeah, it's just a great ad. I don't know, was it like 2 or 3 minutes long? Very well professionally done. Essentially, really marketing, I think, to the millennials and Generation Z in essentially, marketing Bitcoin as a new store of value, the new,
drop gold
investment
and buy crypto.
Right.
So instead of gold only. But has anybody heard like where they're airing it? Like I've watched the video, but I don't know where it's being aired.
Yeah, I mean, it just says U.S. TV commercials. So I think we're going to start seeing commercials across networks with this commercial that Barry's putting out that's telling people, hey, it's time to drop gold.
No, that'd be cool to see.
I mean, it's so production wise, it's so well done, isn't it? I mean,
I thought it was pretty well done. One thing that it reminds me of is since I'm old, I was living before the internet, and I remember when the internet was starting to come out, everybody was like, what is this? That kind of stuff. But I remember a commercial almost clear as day. I was sitting in my apartment in Chicago with my wife, or my wife at the time. I can't remember what it was. But I remember a Ford commercial coming on, and it said Ford.com down in the corner. And I'm like, what the hell is that? So it's like, that was my initial like, okay, this internet might be something. So you got this commercial in Ford.com. What is this .com? I didn't know what the hell .com was at the time. I mean, I kind of heard the internet, but I didn't know what that was. That to me is a perfect correlation to this gold commercial. Someone's going to be in their apartment in Chicago. They're going to see that commercial. And they're going to be like, what the hell is this? And I think it's what's going to spur a lot of new people into this market by seeing that commercial.
Well, hey, let me do this. I do want to. I think we can do this. I'm going to play this commercial.
Oh, you got it?
Yeah, I got it here. So you guys can see it.
Let's get thrown off YouTube. That's awesome.
So here we go. Let me.
Why did you invest in gold?
Just freeze it on my screen.
Living in the past. In a digital world, gold shouldn't weigh down your portfolio. You see where things are going. Digital currencies like Bitcoin are the future. They're secure, borderless, and unlike gold, they actually have utility. Leave the pack behind. It's time to drop gold. Go digital. Go Grayscale.
Yes, it's such an awesome commercial. I love it.
I mean, that is a great commercial. Yeah.
It would be good.
It's interesting.
Socrates, what do you think? Do you think it's gonna market well to the millennials?
Yeah, I definitely think that's a great just avenue, a great way to bring some recognition to the space, especially from younger people. I think that's one of the biggest shifts that's taken place over the last couple of years is everybody really used to view Bitcoin as cash, as a peer-to-peer cash, whereas over the last couple of years, a lot of people, especially myself included, have started to view it as electronic gold. And for somebody that is outside of crypto, they've never bought or owned or even really thought about crypto, they don't really know what the use case is. What is the value proposition? And to get somebody to explain to them what the use case is extremely difficult. If you go online and Google it, you're going to have, a heck of a time. If you ask some friends, they're not going to know. So just having a simple advertisement that says, that Bitcoin is trying to replace gold, that could really, like Brian said, that could really cause some people to have like a light bulb moment where they're like, oh, well, I've kind of heard of Bitcoin, but I never really knew why I would even consider using it. And I know why I would buy gold, because I don't trust the banks necessarily, something along those lines. So that could really help a new person to latch on to the value proposition of Bitcoin. And I think anything that we can do to simplify it and to spread the word is going to go a very, very long way. So I love that.
Yeah.
Right.
So Bobby and Brian, let me ask you this. So do you support this article and what GBTC is doing?
Yeah, I support it just for that aha moment, like the light bulb going off. That's why I support it, because I remember clear as day when I saw that Ford.com commercial and look at the internet today. Yeah. I mean, that was back in, I don't even know the date. It was so freaking long ago. But that to me is cool. So I definitely support it.
Bobby?
Yeah, I support it for the same reason. You know, anytime you can have a quick message in 2 minutes, I mean, let's face it, our attention spans are pretty short, and anytime you can get a message that's pretty clear and concise in a short period of time, that's a win. So.
Okay, I want to throw a twist here. I want to throw a twist on you guys, and this is going to get a little tricky. So if you guys know, that commercial is pushing GBTC. And if you're familiar with GBTC, GBTC is not quite an ETF, but it allows you to put technically Bitcoin into an IRA or 401k via things like E-Trade or TD Ameritrade or whatever. But here's the issue with GBTC. It's got a huge premium on it. I mean, a massive premium on it. So people that are putting this in their portfolios are paying a lot of money than they would be with Bitcoin. But because it's the only game in town, you got to go GBTC.
Yeah, I absolutely resist that as far as I can throw it. The reason for that is exactly what you're saying. Yeah. It's more of the same that we have today. I think the management fee on that thing's like 2%. It's ridiculous. So that to me right there is I resist that. I resist the product of GBTC, but I don't resist getting the information out there and getting people to see it.
Yeah.
So that's where I'm at on that.
I support it because I think you need to have, in this space, when you think of traditional markets as well and finance, you have to have a diverse set of products out there that will entice different types of people, right? Not everybody wants to be their own bank. Not everybody wants to own their, own private keys. It scares them. They'd rather, invest in more like an ETF feel because that's what they're used to. Mm-hmm. And so I support it for that reason, because I think in the larger picture of things, it's a win for everybody, So
yeah, a stepping stone for other people in the markets. I get it.
Yeah.
Socrates,
right. I just changed Brian's opinion there. See that?
Oh no. There's no way in hell I would buy GBTC. I'm saying that right now. You're talking to a crypto anarchist over here. There's no way I would do that. Okay, go ahead, Socrates.
Yeah, just real quick to be critical of the ad. There were a couple things that did jump out at me. The first thing was that it said something along the lines of digital currencies like Bitcoin and others are the future. Like it really lumped Bitcoin in with everything else and didn't really distinguish how Bitcoin is electronic gold, whereas the others do not share any of those properties. And then it also didn't have the Bitcoin logo there at the end. Even if you are going to shill GBTC, still using a Bitcoin logo, I think would be a very important thing to do. So yeah, I think there were some things that could be improved upon a little bit. But then again, Barry Silbert, he's, isn't he the Ethereum Classic guy? He's not really, I've never really seen him pump Bitcoin that much. So seeing him, even though he's not using the Bitcoin logo and he's more pushing towards GBTC and potentially lumping in some others, it's still really good to see him focusing on the value proposition of Bitcoin, as I understand it.
Yeah.
Yep. Yeah, no, a good eye for seeing that for the first time.
And if you paid any attention, Tone Vase actually, which was shocking, I'd say this was probably a month ago, he actually got into GBTC because the price had come down enough that it technically sort of erased that premium a little bit. And I think he was trying to do a trade on it. And I don't know if he's back out of it again or if he's still in that trade. I don't know.
Was it an arbitrage opportunity?
I'm pretty sure it was an arbitrage trade.
Yeah, was it? Yeah.
I think remember that. And there are some very good arbitraging opportunities due to that premium that it will fluctuate. And when that premium does get close to par or even a little under, it can be a really good opportunity to buy just as an arbitrage. And I do think I remember the episode you're talking about with Tone, and I'm pretty sure that was what he was doing.
So that would make sense.
Awesome. Okay. I got my article that I want to put out there. Let me put it back on the screen again. Let me see if I can get it up here. Support. Nope.
Are we going through top 3 news items, or?
Yeah. This
you were the first one.
This is a 3. You're the first one.
I missed the memo.
Okay, that's okay. It's all good. All right, now we're gonna take a second here because wait, there it is. Okay, hold on.
We lost your voice.
You're on mute, Paul.
Okay, I'm back. So here's the article that I want to put out there. And again, I will state my case right up front that I resist this article because for several reasons. Now, when I first saw it, I will be honest, I got excited because it said 11% of Americans own Bitcoin. Major awareness increase in 2017. So when you read that headline, you're like, yes, oh my God, this is great. However, when you start reading down through this article and start understanding, a couple problems jump out at you right away. First, how do they know 11% of Americans actually own Bitcoin? Well, they did a survey. Well, who did the survey? Okay, the survey was done 2 days, April 23rd to April 25th, and it was only 2,000 people. Who are those 2,000 people? We don't. I mean, it's so many issues with this. There's no way for you to be able to quantify if 11% of Americans actually own it. But here's what I think they were trying to get at, and it tells you down here at the bottom. What they did is they took a poll, and some of these people that do this survey stuff, maybe they have some methodology behind it. But what the title really should have read was that people that are 18 to 34 claimed. See, it says claim to invest in Bitcoin, while those 35 to 44 accounted for 11%. And then they go through the different age range. It's not 11% of Americans owning Bitcoin. The title is what's messed up, not necessarily what happened. So, Cointelegraph, I'm sorry, but I resist the way you guys reported that article. So I don't know what you guys thought was on that one, but it'd be interesting to see if you guys paid any attention to it or was aware of it.
Yeah, I mean, I go with the resist too on that. It's just a lot of data that's not really. I don't know. I just resist it because it just doesn't seem right. The part of it that I do like, the support that I do like is if they did a. Are you guys getting some weird feedback?
Uh,
Yeah, I was hearing something.
Yeah, I couldn't hear myself talk. It was kind of weird. I resisted for the same reason Paul was resisting it, but for the support side, if they did another survey that was just as shitty in 2017, and they did a new one, I like the year-over-year increase at least they got off the numbers. So if there's anything to support out of it, it looks like the numbers have increased a little bit based off of the numbers a year ago versus today. So that's about it.
Yeah, and I agree with you. I mean, that's the good thing about this. What I take away from it is the fact that awareness is in fact increasing. I mean, if you ask the average person, if you even say Bitcoin, their eyes sort of light up. They sort of know what you're talking about. So from that perspective, I think that it's pretty good.
Yeah. I don't know what that noise is, but it's driving me.
Ditto for me. Yeah.
Yeah, that is weird noise. I'm making sure it's not on my end.
Yeah, it's not on mine.
Yeah, I mute myself.
So yeah.
I wonder if it's me because I'm not hearing anything.
No, I'll go on to my article. Is that cool? Go on to my article. All right, cool. My article was there was an article that was out that talked about comparing Zuckerberg to CZ on Binance, and a couple of the things that they were comparing was, that they're cool dudes and they dress all comfortable and all that kind of stuff, and I'm like, that's all great. The thing that I don't like the comparison, for one, I don't like the like on the Zuckerberg side and the Facebook side, to me, that's a privacy issue. I don't know CZ that well yet because he's pretty new. I mean, he just started Binance, what, in 17? So I don't know him that well as a CEO on his privacy issues or anything like that. But to me, it seems like the other end of the spectrum. I mean, he wants to build a decentralized exchange. So right there, I'm already game for that. So I don't like the comparison. And I kind of resist the article for the comparison of just because they're cool dudes and they dress well and they have a big following. But beyond that, I see them on two ends of the spectrum. Because to me, crypto is a result of anarchists and cipher, the cipher guys that brought encryption to the market. I wrote down here that I'm here to educate on the importance of privacy. That's why I don't really like the comparison here. So I personally think with this tech, without like an anarchist type view or characteristics, I think it could be tools of control and tools of surveillance. And to me, comparing the two, I think Zuckerberg is on that side. I'm not saying him personally, but the persona is control and surveillance and non-privacy. And then on the other side, CZ wants decentralization. So to me, that's kind of the other end of the spectrum. So that's my article. I just thought it was the headline was like, oh, look at these two cool dudes. And then when you kind of dig down deep, I don't think they're anywhere near each other when it comes to their thinking of bringing crypto to the market. Because, Zuckbucks is going to be one thing that's probably going to be this private thing to be run through Facebook, which is completely opposite than what a decentralization exchange would be.
Yeah, on Crypto Legend, we talked about it a little bit. And what they were saying was that when you look at CZ and Zuckerberg, they both are sort of humble guys. Neither one of them sort of pushes themselves out there, and they're not braggadocious, so to speak. That sort of, and again, the casual dressing. But I agree with you. I mean, that's where it sort of stops. I think CZ has a vision within crypto that is along the right lines. Mark, on the other hand, I think time is going to tell what's ultimately going to be his story. I think he's trying to figure out how to make a pivot and to jump over to the other side, which is a total different business model and all. So it's going to be hard for him to make that jump. But let's see if he can do it. Don't know.
Yeah, no, that was a. I know it's not like the top article of the week, but it was just one of them that kind of jumped out at me right away when I read it.
Cool. I don't know if Bobby and Socrates wants to come in.
Yeah, make a quick comparison. Just kind of what comes to my mind is that Mark Zuckerberg, to me, is more trying to hold on to an industry that is evolving past him. Kind of like I think of him kind of like Blockbuster and CZ as Netflix, whereas Binance and crypto is the future, and Facebook and social media that makes a lot of money by these unscrupulous practices. That's the past, and it seems to me like Mark Zuckerberg is trying to bring the past with him into the future so that his golden goose doesn't die. And to do that, he's trying to make some of these sidesteps and apparent innovations to try to keep up, when in reality, he's just totally missing what is the problem and what is actually changing and what is actually the market is demanding. And that's a big part of it is privacy and is it's decentralization and is self-sovereignty. And Facebook is none of those things. Yet Zuckerberg is not willing to, I don't think, come to terms with that quite yet. And he's operating in a dying industry, whereas CZ is on the other end of that spectrum.
Yeah.
I completely agree with that. I think it's similar to kind of the what you're seeing with the the JP Morgan coin. I think you're seeing these kind of dinosaur companies that are trying to freshen up their image a bit and maybe realize there is a really powerful thing going on here with cryptocurrencies. And I think they're starting to realize that, they're behind the 8 ball. And so, let's face it, Facebook has had a really tough year. in terms of earnings and their stock price, and technically and fundamentally, things are not looking great, right? And so I think this is just one way of kind of just freshening up their look a bit. And I don't really know how serious they are about it. As CZ, he's passionate about finance and cryptos, and you see it every day. And so I can't tell if this is just a play to maybe bring a bit more confidence into their day-to-day businesses from investors, or if it's really something that they're going to really take hold on. So that's my opinion.
Yeah, time will tell on that for sure.
Well, hey, I think it's time to give a little bit of shout out. I'm going to bring them up on the screen again so that folks can take a look at this, because I think it's really cool. It's Altcoin Daily. These guys, we wanted to sort of give a shout out to them because we think what they're doing is really cool. They provide some great commentary on issues that are sort of impacting the industry, specifically as it relates to the altcoins. And so, like, even the video that they have that's recently right there, they were saying, be ready. If you're waiting to buy Bitcoin, then you might want to watch this. Just my opinion. But they do give some really good information as it pertains to the altcoins. I think folks should subscribe to that channel, ring the bell, check them out. They are putting together some stuff that will help you if you listen to it. And again, no one is perfect at this stuff. No one is going to make perfect calls, but I think they do a good job at covering the topics and the issues. So I don't know if you guys, what you think about it, but I like them.
No. I ditto to that. Their daily videos. I mean, they cover Bitcoin, altcoins, any type, all the cryptocurrency. I think they do a really good job of I guess you could say dumbing it down. They're not really dumbing it down, but it's an easy read or an easy listen. And I think they provide a lot of really good information. So I thumbs up to them for sure.
Awesome. All right, let's jump into some Q&A.
All right. Yeah, no, I'll start off on the questions. I'm gonna read.
Get ready, Socrates.
No, I'm gonna read off mine because it has a little bit of a color to it. So I have a bad memory, so I'm gonna have to read here. Question 1. We just had Murad on last week. And by the way, he says hi. We were on the show last week, and he said he talked to you in Vegas, I think it was. And he said he wanted to say hello to you. So I just wanted to throw that out there.
Well, we had him on we met each other in Vegas and chatting online before and after that. So yeah, appreciate that, and definitely hello to Murad as well.
All right, cool. Yeah, we had him on last week, and I know both of you were bearish Bitcoin back in February, and I believe you probably still are based on the hyperwave, and we'll get into that later. And recently, Murad has turned bullish and said that the low is in at 3,100. He said that on our show. Are you still bearish Bitcoin and see 1,200 as a possibility? And I get the 1,200 from the bet that you guys have that he told us about, and we can talk about that later too. If so, tell me why you still think this, and also what signal do you need to see to get you to switch to the bulls and say that the hyperwave has been broken? Does the hyperwave actually have any bad calls, or is it all 100%, which is extremely highly statistical, but also highly unlikely? So what could make it break down? So a couple of questions within a question, but the main thing is are you still bullish to 1,200, and what are the reasons?
Yeah, absolutely. That's a great question. I'm just jotting them down so I make sure to answer everything that you asked. So yep, wearing the red tie to indicate that I am still bearish, and I will be watching the charts very, very closely over the next couple months to see if I need to change my mind and get on the other side of the fence. I made a tweet recently calling right now kind of like Groundhog's Day for the Bitcoin bear market. It's like right now I'm seeing the groundhog kind of stick his head out of the hole, and I'm trying to see if there's a shadow there or not. I do think that there's a very good chance that the bottom is in. I'm seeing a number of indicators that are pointing me in that direction. However, I do think that it is still too early to tell. For me, it's still too early to change my stance. I want to be late. I don't want to be early. If I'm wrong on the bottom, then that's fine. I'm gonna wait and let the market prove that to me. I really do not want to be early. I firmly believe that the 15 to 20% on either side of the kind of football field is where you really want to stay away from or be extremely careful. And if 3,200 was the bottom and we are entering the next bull market, then this is absolutely still the bottom kind of 15%. So I'm not at all worried about missing out over the next couple months if I do turn out to be wrong, because there is so much room to the upside. If we really are entering the next bull market, then there's literally no doubt in my mind we're going to six figures. So if I'm buying at 7,000 instead of 5,000, that's just entirely irrelevant to me. Whereas if I keep thinking that the bottom is in at 10,000 and then it's 75 and then it's 6, and then every time that we get some consolidation, I'm turning bullish. Now that's a much bigger problem than actually just being late and missing out on that first 15 to 20%. So I see a lot of good reasons to say that the bottom is in, but for me, it is still too early to make that claim personally. So what I'm going to be looking for from here to turn bullish is basically as simple as a higher low and a higher high on the weekly chart. From my perspective, we are still all lower lows, lower lows, lower lows, lower highs on the weekly chart. And we still need to see what happens on this next kind of correction. If this next correction finds support at 4,600, 4,700, and then busts through 6,200, I'm going to be bullish, and that's a fact. And at that point, I will view it as a very highly probable that the bear market is over and that the bottom is in. Whereas 6,200 for me is we do not want to be getting ahead of ourselves. That's going to be a massive area of resistance. The two biggest volume profiles on the Bitcoin chart are at 6,200 and 1,000. So between there, I'm still going to be expecting a return to 1,000. If we get over 62, then I am going to be seeing enough indicators that make me turn bullish. What matters most to me outside of hyperwave are moving averages. And right now I'm watching the 50-week moving average very closely. Was watching the golden cross coming in and looking at that as my first indicator that it's time to turn bullish. If the 50 and the 200 week, 50 and 200 day EMAs make a golden cross, that's my first indicator to turn bullish. If the price closes above the 50-week exponential moving average, then that is my second indicator to turn bullish. If that 50-week moving average goes from trending down to now it flattens and it starts moving up, now that's my final indicator to start turning bullish. So if that 50-week exponential moving average starts trending up, indicating to me that we are in a long-term bull trend, and we create a higher low followed by a higher high above 62 or so, at that point, I'm going to be very confident that the bottom is in and I'm going to start buying. In terms of hyperwave, that would be going against hyperwave. Hyperwave says that once you enter phase 7 and you break down phase 2, 100% of the time we return to phase 1. And the only way that hyperwave is wrong is if the price creates a new all-time high before returning to phase 1. So it could be real feasible in terms of hyperwave that the price goes from here to 15,000 and then to 1K. It seems insane, but I have seen charts that have done that. And that is something that, will be in the back of my mind. So if I do turn bullish around 65, 7,000, it won't be having anything to do with hyperwave. It will be mostly doing to the moving averages. And in the back of my mind, thinking there's still a possibility that hyperwave is correct. So hyperwave wouldn't really technically be wrong until a new all-time high is created. And like you mentioned, 100% seems absurd in terms of how anything about technical analysis. Nothing is nearly that accurate. And that's just the problem there is that we just have such a small sample size. We've only got a couple hundred of these things to look at, and that's pretty much irrelevant in terms of statistics. If we had thousands and thousands of these, that would become more significant. So as it stands right now, it's something that's just bound to happen sooner or later, that hyperwave will be wrong, and that it will break down phase 2 and it won't return to phase 1. And Bitcoin is a perfect thing to do that, due to its fundamental nature of having every so often that could be a big factor that comes into play and causes us to find support before returning to phase 1. So there are a number of reasons that could cause hyperwave to be wrong, and there are a number of things that I would be looking before then to go ahead and get myself re-entered into long exposure.
Oh, cool. Yeah, one of the things you mentioned is you know, the 15% on the bottom, 15% on the top. I'm not a bottom picker either, and I'm more of a trend follower. So I'm a person that usually buys into something, you know, not at the bottom, but I might miss that first 15%. But I know for sure that I'm on a better trend, and then it's a higher probability that I'm gonna capture the 60% move, and not so much I might hit the top, but, you know, working back the other way, I might capture that middle ground. That's basically how I've traded over the years. So for me, I bought in December, on Christmas Eve, actually. But when I did that, I had stops below a new low. It was pretty close to, you know, the 3,100. But that was my first thing, because I had my first instinct of, or not instinct, but my indicator started to change. But for me, for the algorithms that I look at for my momentum indicators and my oscillators and everything, it was the February low and that buy in February that really signaled my stuff to show that we're in the bullish move. But I'm with you, because all of my stuff shows a 6,500 or whatever that number is on the chart as the level to really watch to see if we are rotating into a primary bullish trend. But I've been riding this middle part to the point where my thing started in February and then went up to, if it goes up to the 6,500, or actually my number was probably right around 6,000. So if we get to 6,000, it goes to 6,500. I missed a little bit on the bottom from a February buy. I missed a little bit on the top if it hits 6,500, but then that could be just that leg, and then we could be dropping from there. So I'm in this leg of a trend move where I bought in February, and I'm going to be selling out most likely at 6,000 or so, because there's major resistance there. So I'm with you on, we need to get above that level to really give us a strong signal that thing's going to continue. If it doesn't break there, I'm going to be looking at the low 4,000s for the first level to even consider a buy. And if the momentum is so strong coming back down, and it breaks that level, I don't see any reason why it couldn't go back down to a 1,200 if it broke that 4,200 to the downside. So I'm kind of with you. I think I'm just on a different time frame of where I'm looking at the trend, and I think you're just looking at a little bit more longer term. I'm just a little bit more intermediate term. But I agree with everything that you said on there. It's pretty cool.
Yeah, absolutely. So that was one thing to clarify there is the time frame. I do kind of swing trade on a shorter term basis where I'm in and out of positions in about a month is my target. Whereas for long term, more investments, I will just kind of buy and hold something until it looks like the long-term trend is reversing, just like you were mentioning, basically using moving averages on higher time frame charts. So for Bitcoin and looking to buy back in before the next bull market, I'm looking at that from the perspective of kind of an investment and something that I'm basically going to buy and hold, and then look to profit take once the signs of a reversal start showing themselves. So in terms of just shorter term swing and position trading, I fully agree with you. I was buying in December and February around the from 3,000 to 3,500. I was calling for this bounce up to 58 was my target. Publicly, I was very confident that we were going to get some sort of bounce off of 32 before getting the next leg down. So yeah, I definitely do agree that we could see one spike up to about 6,500 or so, and then just collapse back down. But in terms of me fully scaling into long-term exposure that I sold out of back in the beginning of 2018 and the end of 2017, I'm waiting for as much confirmation as I can, and we'll be kind of piecing in and out. Whereas in the meantime, I absolutely will be looking at making shorter term trades, and fully agree with you that if this next pullback does not find support at 4,200, then I would not expect 3,200 to hold as support. And if we do break down those areas, then I would be very confident in returning to about 1,200, based on how like the market would just freak out. If we broke down 3,200 from here, I think we would panic sell down 1,200, and that's really what I've been waiting for, is some capitulation. I really haven't. I have no confidence that that was capitulation at 3,200. There was no telltale signs there for me to believe in that. And when I am looking to pick bottoms, I am primarily my number one indicator is emotional analysis and looking for just panic and flat out capitulation where everybody is freaking out, and that to me is what indicates a bottom, and that just I didn't feel that at 3,200, and I also didn't see the dragonfly doji or the hammer doji that always happens with capitulation. I didn't see the volume spike that almost always happens with capitulation. So for me, that emotional analysis is the main reason why I remain bearish, and fully agree with you that if we do break down 4,200, I would be really confident in breaking down 25 and going straight to 1,200.
Yeah, cool. I think we attack the markets very similar, so it'd be cool to share our charts together, because on how you got your 58, and I'll show you how I got my 6,000. I think we're pretty similar on that.
Can I interject with a quick question here for Socrates? So a lot of us here are traders, right? And we're looking for speculative opportunities. And I follow a 30-70 kind of strategy. So 30%, I do a lot of scalp trading on my portfolio, and 70% is more kind of on the longer term shelf. But for those people that are out there, because there's a lot of them, not everybody trades like we do. Now, obviously, we're not giving financial advice here; we're giving opinions. But for those people that are looking to get into Bitcoin on a long-term basis, they have let's say 3 to 5 year outlook. Is this not a good opportunity for them to get in, especially Socrates, since you feel that Bitcoin could reach a 6-figure price in the future? So for those people, does it really matter whether they buy Bitcoin at $1,000 or $5,000? If it's going to 6 figures.
Yeah, great question. And as a matter of fact, before logging on with you guys, a friend of mine was over at my house, and I was helping him to set up his ledger and make his first Bitcoin purchase. And he was investing a pretty significant amount of his net worth into it. And I fully supported his decision. I did kind of hint and say that I would, strongly recommend saving about half of your position in case we do break down from here, to kind of try to get him mentally prepared for what really can happen if his investment does become 20% of what it is today. That can be extremely, can cause a lot of anxiety and be very scary. So to your question, as I do think that anybody with a 3-year plus time horizon that wants to buy Bitcoin, do it, and do it now, and do it on a consistent basis. Consistently buy in, and if you're willing to hold over the next 3 years, I am very, very confident this will be the best bet that you make in your entire life. However, some people just literally don't have that ability. They've never really invested. They've never really gambled. They just have never really dealt with the emotions that are inherent of speculating. And if somebody does buy in right now, and then the price dumps to $1,000 over the next 6 months, and this is like the first investment they've ever made, and they just put in $5,000 and now it's worth $1,000. Well, they feel like a moron and they've got all this anxiety and they want out. They just, it's not worth it to them anymore. They're losing sleep. They can't stand talking with their friends and family about it anymore. So for that person, as long as they're mentally prepared to hold on for a long time and they have the technological skills to save their stuff, to get their private, basically not get hacked, so to keep everything secure. If they're able to do that and they have the emotional wherewithal to stick to their guns and to stick to their game plan in the event that there is capitulation happening, those people they're buying now are going to be the ones capitulating at 1,200. That's just how it usually works. And the less experienced investors will be more likely to do that. So as long as that person knows what they're getting themselves into and they have the ability to hold through the next 2 years, despite whatever can happen, then I absolutely think that that person should own Bitcoin and they should be buying it right now. I think that is a much bigger risk to have 0% of your net worth exposed to Bitcoin than it is to have 5 to 10%. If you've got 5 to 10% of your net worth exposed to Bitcoin, you stand to make a ton of money over the next 10, 20, 30 years. Whereas if you have 0% of your net worth in Bitcoin, you could be risking everything if the system really does get upended. So that is what I am telling people, and as long as they're ready for what they're getting themselves into, I think that they should absolutely be investing into Bitcoin right now.
Yeah, I look at the 5 to 10%. Like if someone has 5 to 10% of like physical gold, and we just saw that drop gold commercial, I would actually say, hey, take 5% of that physical gold and put it in Bitcoin. I mean, not GBTC. Don't put it in that. Just buy Bitcoin. So that's the same kind of thing of what you're saying there. It made me think of that commercial, and a lot of people are having inflation hedge of physical gold. Just take a percentage of that and put it in BTC, not GBTC.
I think Tom Lee with FundStrats is advising his clients 1% of their net worth into Bitcoin and cryptos. So, but yeah, I totally agree. I support you, Socrates. I don't resist what you just said. What you said there. I think if you're a long-term holder, almost look at it as your like retirement plan. Your 401k. Just have some exposure to Bitcoin and literally turn off the charts. Don't look at the news and just forget about it. And
absolutely, that's what I always recommend. Is just don't even think about it.
Right.
All right, Brian, let's shift our brains back to TA here a second. On to question 2. I've been a practitioner of Elliott Wave theory for many years and would put myself in a so-called expert class, I guess you would say. I've actually took the exam, just to learn about all that kind of stuff. So I've been using it for a long time. I'm in no means an expert on hyperwave. I barely know anything about hyperwave. But to me, when I first have that first glimpse of it, it looks like there's similarities, but there might not be at all. So, and I don't even know if you know Elliott Wave or not, but could you give me some insight what makes hyperwave different from Elliott Wave, or is it similar, or do you have any comparisons at all on those two?
Yes, that is a very important question that I'm very glad that you asked. And there definitely are a number of similarities, and there are certainly a number of differences as well. I do have a chart that I could share that really makes it pretty simple. If I'm able to go on screen share, I'm not seeing how I would do that.
Over to the top
to the left.
If you move the mouse over it, a menu should come up, and it's a little green arrow, or green screen with an arrow. I don't know if you can see that.
Okay, I see a green screen with an arrow. Share screen, great. Okay, let's see here. Can you see that?
Yes, indeed.
Yep.
Okay, so I would kind of put myself on the other side of the fence from you in that I practice Elliott Wave, but I am certainly no expert, and I really like it, and and use it, but definitely wouldn't consider myself an expert. So if any of these counts are incorrect, then that's really okay, because this is just kind of more of an idea for how to look at the differences. And this is actually a sneak peek out of the book that we're working on right now. Haven't shared this chart with anybody else before, and we do have a little section in the book to go over the differences and the similarities between the two. So the first thing to describe is that Elliott waves can happen and do happen within a hyperwave. So we have our Elliott wave counts here. We've got 1, 2, 3, 4, 5, A, B, C, 1, 2, 3, 4, 5, A, B, C. So those would be the Elliott wave counts as I see them. And then here are the hyperwave lines. The red is phase 1, blue phase 2, and green phase 3, 4, 5, 6, and 7. So the main, a couple of the main differences are that hyperwave, all of the hyperwave lines are areas of support or resistance, except for phase 7. So phase 1 through phase 6 all act as areas of support or resistance, and they can never be violated, or else the phase is over. So right here we have phase 1. As soon as we have a close above, phase 1 is over, and now it's up to phase 2 to start. And if a candle was to close below phase 2, then it would be violated and it is over. No more hyperwave. Same with phase 3, phase 4. We cannot have a close below those lines, or the hyperwave is over. And with Elliott waves, the counts are not necessarily areas of support or resistance. We've got the impulse waves going up, and at no time do these lines necessarily need to be an area of support or resistance. Closing above or below the Elliott wave lines really doesn't indicate anything as far as I understand, whereas the hyperwave lines are crucial. As soon as you close below phase 4, like we did here, phase 4 is over and you're entering phase 5. And then as soon as you close above phase 5, you're entering into phase 6. So that is the main difference there, is that hyperwave lines are areas of support and resistance, whereas Elliott waves are not necessarily. Another main difference is this phase 1. Hyperwave theory states that phase 1 is the most important phase of a hyperwave. The longer that you're stuck in the sideways range, the more kind of pressure you build up. I kind of view this as a volcano, an explosion, and this is the underlying kind of pressure and magma that's building up. The longer and cleaner the phase 1, the more likely the hyperwave is to complete all of its phases. So the phase 1 is the most important phase of a hyperwave, and Elliott wave doesn't have anything like phase 1. And then another difference is that hyperwave says that it should always return to phase 1. Once you break through, you should go through phase 2, 3, 4, 5, 6, 7, and then 7 should return to phase 1. Whereas, if I understand Elliott wave correctly, it should always find support above that first impulse wave. So those are two very important key differences there. And yeah, that would be the primary things that I would say separate the two kind of approaches.
Okay. The long red line is just resistance over a long period of time.
Correct. It would just be basically a trading range.
Consolidation.
Yep, just an extended period of consolidation where never once does a weekly candle close above it, but multiple times does it try to, is what you like to see.
Okay. Okay.
Hey, Socrates.
Right. I have a
how
lot of
long
questions,
has-
but I'm going to have to ask you offline because it would take a lot of time.
Yeah, I'm more than happy to go over this with you. Yeah, we can definitely do that.
Sorry, I just had a quick question. How long has hyperwave been around? Is it something that you invented, or was it Tyler, or was it kind of a collaboration between the two of you? created hyperwave, or has it been around for decades?
Yeah, great question. And that's one of the things that's so exciting about it to me, is that it has been around for decades, but it hasn't been public until very recently. So Tyler Jenks invented hyperwave theory in, I want to say it was 1978. It might have been in the early 80s, but he was trading commodities at the time, and he noticed two identical patterns. One happened in sugar and the other was in silver, and they just looked identical. And after seeing that, he wrote down on his little notebook, he just kind of jotted up the archetype of the 7 phases. And he just thought, I'll keep that in mind and see if this is some coincidence, or if maybe this pattern is reoccurring more than I'm thinking. And as it turned out, the original pattern that he drew has never changed, and it has repeated itself almost countless times. There's been numerous examples. So that is when it was invented, was when silver was going on, and it was actually while the Hunt brothers were trying to corner the market, and they pumped the price from about $6 to over $30, up to, I think, close to $40, by them just taking out huge positions, using a lot of leverage and getting a lot of loans from banks to basically try to corner the silver market. And that sent it into a hyperwave. And that was the first one that Tyler was able to recognize in real time and sell in real time. So he was able to get out of silver in the mid $30 range. I think it was like literally 1 week before Silver Thursday, before the thing just totally crashed down to the floor. So he's been using this in multiple markets over multiple decades, and he's been extremely successful, to the point where it's almost hard to believe that he was able to sell the top of every major bubble that has occurred over the last 40 years, from silver to the Japanese equity bubble in 1990, to the dot-com bubble, which was a perfect hyperwave in 2000. And then in Bitcoin in 2017, all of those he was able to exit within weeks before the eventual collapse. And it was due to nothing more than hyperwave theory. So he kept it to himself for all that time, didn't share it with anybody else, because he was operating his own fund, and he needed to give himself an advantage over the competition. So only as of 2017, after Bitcoin at the top of its hyperwave, at that time he decided that he would share basically everything that he's been working on over the last 40 years or so. So it's something that has been around for quite a while, but nobody else has known about it until really now, until the last couple of years. So that's one of the things I find so exciting about it.
Yeah, does
great.
hyperwave?
Thanks.
Oh, sorry. Does hyperwave use Fibonacci at all to measure support and resistance areas, or no?
Not. However, that is something that we have just started to explore to try to see if there are any Fibonacci relationships in there. Tyler does use Fibonacci a lot. He's just never necessarily combined it with hyperwave, in the sense that maybe phase 5 will tend to come down to a certain level. The area where I'm really interested in is seeing if the length of the phase lines has a Fibonacci relationship. For example, adding the length of phase 2 and phase 3, and then that equaling the length of phase 4. Something along those lines. I've started to see some that occur in some places, but and that's something we've just started to explore, and we're really interested in finding out more. We're both very much inclined to think that there are some Fibonacci relationships there, but we haven't necessarily put our fingers on it yet.
Yeah, because I mean, I'm Fibbo Swanee on my name, so Fibonacci is what I've been. That's kind of my expertise over the years. Is I use a lot of Fibonacci studies. I really use them to measure waves. So when I was looking at the hyperwave and the Elliott wave, that was the first thing that came to my mind, that there could be some fuse of the two there, that you can really get good measurements on what the hyperwaves would be by using some of those Fibonacci levels. I was dabbling in it too, and trying to get to 2, but I didn't really know a lot about hyperwave on how to apply that. But I definitely see where that could be something that you guys might find something out on that. It's pretty cool that you guys are starting to look at that.
More people like yourself that start to kind of explore this new theory that we just found out about, the more we will find these relationships, I think. The more that somebody with your certain background and expertise looks at something like this, you'll think different. You'll have different insights than somebody else will. So that is something that we're really excited about. Specifically with this book, is hoping that a lot of people will not only read it, but will then have their own personal insights that can add to what we're trying to put together. So yeah, that is very exciting. For anything that you have to add, I would be very interested to hear.
Oh, absolutely.
All right. Yeah, I think this hyperwave thing is so cool. I have 2 questions before we get to my question. Sorry. Socrates, in terms of, so Brian asked about Fibonacci. My question is, does hyperwave, does it only work on certain time frames? So do you have to look at it like on a daily or weekly or monthly, or does it work on multiple different time frames? And then also, are there any momentum indicators as well that could kind of indicate when different phases might begin or end? Have you guys looked into that?
Absolutely. Yeah, great question. So yeah, let me try to make sure that I remember to answer them both. So in terms of the time frame, yes, absolutely. Hyperwave should be done on weekly charts, and all of the entries and exit signals are all based on weekly closes. So you can potentially use a monthly chart on some of the bigger hyperwaves that we're seeing that have been lasting like 40 plus years. Some of those can work very well on the monthly. However, it's all set up for weekly charts and weekly closes. That being said, we have found some hyperwave fractals that occur on smaller time frames. Now, these are very, very rare, and you almost never see them, such that they're so rare that you can almost just forget about them. But sometimes you will see like a 1 minute chart take on this exact same formation. And when that does happen, you absolutely can use the rules from hyperwave to go ahead and trade that. However, the likelihood, the percentage that it's going to work out in your favor is not nearly the same. The percentages for the weekly charts have all worked together based on those closes, whereas the 5 minute chart might show that pattern and it might be profitable to trade, but it won't be nearly as profitable. And then in terms of momentum indicators, yes, absolutely. There's a number of different indicators that can be used to complement hyperwave, as with almost anything else. So one of the things that I like the most is the average directional index. That was by Will Wilder.
That's my favorite. So that's why I'm glad you said that one. Sorry, go ahead.
Don't see too many people using that one, but yeah, it can be very, very powerful for helping to spot tops and bottoms and basically exhaustion points. And essentially, when you get into a hyperwave, when you buy in, you want to buy in around phase 3, and you want to hold on all the way until phase 4 is done. Despite what the average directional index or the RSI or anything else is telling you, you really want to continue holding on until phase 4 is violated with a weekly close below. However, I personally like complementing with these indicators and using it to kind of scale in and scale out. If the ADX is showing that we're at an exhaustion point and I'm up a lot of money on my position, but hyperwave is telling me to stay in because we haven't had a weekly close below, well, I'm still going to maybe chop off 50% of my exposure just to go ahead and capitalize on that, because I do trust in the ADX a lot, and having an indicator like that to complement the hyperwave pattern was extremely beneficial.
Great. All right, thanks for going through that. And we're already at 9:10, so I'm gonna try to run through my questions quickly here. I'm kind of paraphrasing. You and I kind of met on Twitter. We were kind of going back and forth early about Palladium, going through Palladium charts. And I remember, I'm paraphrasing here, but I remember you saying something to me that I thought was kind of fascinating. You said that when you've studied past bubbles, the economic cycles don't really repeat themselves, but the psychology of the bubbles do. So I'd like you to kind of just maybe clarify that a little bit more for our audience and what you mean by that. And then the second part to that question is, Bitcoin only has a 10-year history. So when you're looking at hyperwave, is that a concern for you in terms of confidence that the price will retrace back to phase one?
Great question. Yeah, so I definitely do think that that the answer is kind of in what you said up front. So the market's maturity is not that important to me, especially if there is some sort of bubble occurring. Basically, the fact that Bitcoin has only been around for 10 years or so could be a reason why many people want to say that this time is different and that this isn't going to be the same as what we've seen before, because the market is so immature. It's only been around for 10 years, whereas I am not of that opinion. I think that it's not necessarily the maturity of the market that drives the price action. It is mostly the psychology of the market participants. And the more immature a market is, the more unsophisticated the participants are likely to be. And therefore, the more likely they are to act out of emotion opposed to just being purely rational and logical and coming in with a game plan, that sort of thing. So the fact that the market is immature tells me that emotions are driving it more than any other market for the most part. A new market is going to be more emotional than a more mature market, in my opinion. And in that case, I just really believe that emotions are going to repeat themselves. In the Bitcoin bubble is not, there aren't very many similarities between it and the 08 mortgage bubble, except for the emotions that occurred at the top and at the bottom. The emotions that we're seeing are what is driving this price, and that is why I really do think that we should see the same sort of things that we have already seen in bubbles past, because it's kind of like I've been there, done that, but didn't learn anything. So we're just going to keep doing the same thing over and over again. So yeah, for me, the immaturity of the marketplace does not indicate that this time will be different, and more tells me that this time should be the same, just because it's even more likely to be the same because of the lack of maturity from the market participants.
Great answer. So hyperwave, the theory behind hyperwave stays constant and true regardless of the amount of data you have. Let's say, being Bitcoin only has 10 years, but you're saying that the emotions and the psychology behind the bubble is what is constant, and that you can trade and draw your lines based on that, essentially.
Yes and no. You are right in the sense that well, you did hear what I'm saying. You were right, but there is a kind of a minimum time that needs to pass for a real hyperwave to occur. So Bitcoin was the shortest hyperwave that we have ever seen. We've never seen a hyperwave move as fast through all the phases as Bitcoin. So it is one that is moving very fast, but it is still within the realm of what we would expect to see. Whereas if one of these happened over like a 2-year time frame, if it was much shorter than what we're seeing in Bitcoin, then it really wouldn't qualify. And as a matter of fact, we have seen that pattern occur, in a number of altcoins. And Tyler refuses to label them as hyperwaves because the time is they're not long enough, and there does need to be some sort of there does need need to be enough time passing for the emotions to really take over. If you're in phase 4 for a year, then you can really become overwhelmed with euphoria. Whereas if it's only phase 4 for a week, you don't really get the same emotions. So yeah, you were right, but there does need to be a minimum kind of time frame, and really 3-4 years would be the minimum that we would expect to see something like this complete from 1 to 7.
Great. Thank you for that. And I'm going to move to the second question because I want to be sensitive to the time here. So my second question is, what signals, non-trading signals, would you be looking out for that Bitcoin is going to be a failure? So I asked this question to Murad last week, and he kind of answered it, but kind of deflected because, obviously he's a Bitcoin bull. And so it seemed like there was no chance of Bitcoin failing. But from your perspective, what non-trading signals would you be on the lookout for if Bitcoin were to become a failure at the end of this? Because at the end of the day, it's still kind of in the experimental phase, right? So.
Absolutely, and that's another great question, and it's something that I do have a couple things that I could kind of go over. This is something I've thought about a lot. I mean, anybody with a significant exposure to Bitcoin has probably thought a lot about what could happen that would cause it to fail. So I have certainly gone through this a number of times in my head, and I don't want it to seem like I'm a huge Bitcoin bear or anything like that I really think is going to fail, because I don't. I think that the chances of it succeeding it's the best bet that anybody can make right now. I really do believe that. However, there are some things that scare me, and a number of the first one that comes to mind is what happens when or if Satoshi decides to withdraw from his wallet. What if tomorrow Satoshi just withdrew every single Bitcoin from his wallet, and we started seeing all these Bitcoins get deposited at different exchanges? That could really send the market into a panic. And that's something that really does terrify me, to see how will the market react once those coins do move, unless it's done in a very open way, like I'm going to go donate all this money to charity or something. If he just kind of silently moves those coins and starts sending them to different exchanges, people are going to freak out, and rightfully so. I would be scared myself. The other thing that has just been nagging at the back of my mind that I don't think is very, very possible at all, but it is something that I can't necessarily get out of my mind, and that is, what if Satoshi is right now working on Bitcoin 2.0? What if he learned a ton from the first process of developing Bitcoin, and when he left, he decided, you know what, I'm going to do this again, but I'm going to do it much better, and I've figured out the problems, and I'm going to solve them, and I'm going to release a Bitcoin 2.0, and it's really going to work, and it's going to be much better than the current one. So I think that's kind of in line with what Murad said, was that as long as there isn't a superior alternative, Bitcoin is going to survive and it is going to thrive. Whereas I'm kind of wondering, like, what would have to happen for there to be a superior alternative? And for me, if somebody was able to make a superior alternative and then dump Bitcoin, or at least help us to see that it is a superior alternative, then that could potentially send the market into a free fall. Just a hack. If there was a bad hack, then I do not see how Bitcoin could survive. I don't necessarily understand how it could be hacked based on the proof of work blockchain. However, just because I don't understand it doesn't mean that somebody else isn't currently working on it, or that in 10 years somebody isn't going to figure it out. So that is definitely a concern of mine. And the other thing that is probably most likely in my mind that I am really worried about is the stock market entering the next major bear market while Bitcoin is still in a major bear market. The thing that really kind of kept me up at night when I'm looking at Bitcoin going to 1,000 if that was to happen, I wanted to put everything that I could into it, because I just was very, very confident that that would be a very safe buy, that I could basically get out around break even if I had to. But in terms of a long-term investment, I wanted to just put everything I could into $1,000 Bitcoin, and was thinking about how to do that and what to watch out for. Well, in the beginning of this year, it looks like the stock market was entering a bear market. It had this head and shoulders pattern. It was breaking down a trend line. The 50 and 200-day exponential moving averages had rolled over. They had made a death cross. And it is really looking like a very high likelihood that we're entering the next bear market. And that's happening while Bitcoin is falling from 6,000 down to 3,000. So what really worried me was another 2008 scenario where it's full on panic and full on turmoil in the global markets. People are freaking out. There's runs on the banks. There's, everything that happened in 2008 happens again. And that happens while Bitcoin is at 1,000. If that was the only way I wasn't going to be buying a ton of Bitcoin at 1,000 sometime, this winter, was if the S&P was also in this enormous meltdown while that was happening. That to me really scared me, is seeing Bitcoin trying to build a bottom and then seeing the S&P enter a huge bear market. If that were to occur, it would be scary. I mean, it would cause a lot of pressure to come into Bitcoin. And Bitcoin would already be so far into a bear market that people would be so low on confidence that that could be really scary. So those are the things that kind of worry me. But I certainly don't think that they're very likely. But it's something that I keep in the back of my mind.
I think you're spot on, especially on that last point there, because something that people don't think about enough as well is Bitcoin has never existed in a bear market, right? And it hasn't really proven itself as a store of value yet in dire times, like gold and other commodities and things like that. So we have this idea that Bitcoin is a store of value, that it's a hedge against human stupidity, but it hasn't proven that yet because it hasn't been around long enough. So and then I guess my second point is, in terms of tech, I'm not a programmer by trade or anything. I wouldn't even call myself a blockchain expert. But from what I know, technology-wise, there are coins that can compete against Bitcoin, in terms of transaction speed, and other ways to kind of measure maybe whether like a Litecoin is more technology advanced than a Bitcoin. So, so one of the things you mentioned was, if there was a superior coin that would come out in the market to compete against Bitcoin, that is a concern for you. So couldn't you argue Litecoin is a better coin than Bitcoin in terms of technology?
I do not think so. In terms of it depends on what we're trying to accomplish. Are we looking at it as cash, or are we looking at it as a store of value? And I do think that Litecoin is a superior cash, but not necessarily a superior store of value. I do not think it is nearly as decentralized as Bitcoin. And for that reason alone, I would feel much more comfortable storing my value in Bitcoin. The Litecoin Foundation, it's got Charlie Lee at the front, and the foundation has been putting a lot of work into developing and into marketing. However, the government could just shut that down tomorrow. I mean, they could just show up and throw them in prison, or do whatever they needed to do to shut down that operation. Whereas that can't really happen with Bitcoin. The way that Satoshi Nakamoto was anonymous and separated himself from the project is what would give me a lot more confidence in Bitcoin as a store of value. Whereas Litecoin, you did say that you're right, that some other coins are faster, then they can transact faster than Bitcoin. However, for me, that's so far down on the list of what matters, especially viewing it as a digital gold. Like digital gold does not transact fast compared to cash or credit cards, yet it's still desirable for people to store their wealth in. So I do think that superior to Bitcoin is subjective, and what one person decides is a superior Bitcoin, another person will say no, it's not. So I think that there will be a bit of a battle there, and our goal is that Bitcoin becomes a reserve currency basically for the world. However, I don't necessarily think that that's what will happen right away. It's my opinion that we will start by having different countries choose different reserve currencies. The United States might choose Bitcoin as its reserve currency, and perhaps Europe chooses Litecoin. We saw this kind of in the dark ages when some countries decided to go with a gold standard, others went with a silver standard, like China did. And the countries that chose the gold standard were much, much more prosperous than those that chose the silver standard. It's more sound money, and it allowed for more prosperous business and trade. So I do think that maybe another country will decide that Litecoin is superior to Bitcoin, and they're going to accumulate Litecoin and use that as their reserve currency because they're convinced it is the best one to use. Whereas other countries are going to pick Bitcoin and say that we're going to buy a bunch of this and use this as our reserve currency. And then from there, we would just kind of we'd have to see who did better. I would think it would be the Bitcoin countries, whereas maybe I'm wrong. Like I said, it is on some level subjective, what is a superior Bitcoin or alternative. What one person thinks is, another person will not. So that's what's so exciting about these next 10, 20, 30 years is we're in an environment that's so uncertain and so new. It's like we're like Lewis and Clark exploring a new country for the first time and getting to see, how are these different communities going to interact with this new thing.
That's a great, yeah. Thank you for that. Okay, I'm going to hand it over to Paul. I think he has a couple questions.
Awesome. Hey, Socrates, actually, both of my questions you probably already answered, but we can, at least cover them a little bit more. The first one was, and I think Murad, when he was talking with Anthony Pompliano on his podcast, he talked about this hyper-Bitcoinization. Do you believe we'll see a time where there is an actual hyper-Bitcoinization? Do you think that that's possible to happen?
I absolutely think that's possible. I'm on the fence as to whether it would be the best way to proceed or the best way to really come to a Bitcoin standard. And it's such a interesting thing for me to think about. Like I mentioned earlier, a S&P like a stock market crash that happened at the same time as a Bitcoin bear market is one of the things that I think could really, really damage Bitcoin in the long run. Whereas on the other hand, that's the same scenario where I can see Bitcoin really thriving and getting some hyper Bitcoinization. Essentially, I'm very much of the school of Austrian economics, and I very much can look out into the world and see that we have been run by Keynesian economists who have been just so afraid of ripping off the Band-Aid that they just keep kicking the can further and further and further down the road. And I really feel like that has put us into this situation that is so unsustainable that we really are going to need one step back before taking two steps forward. A big part of me thinks that we need another Great Depression to happen to wipe the slate clean and to allow us to look at where did we screw up and how are we going to fix this. And as long as things are working, as long as the status quo is working and everybody is honky-dory, then there's no real reason for Bitcoin to take over. There's no real reason for hyper Bitcoinization to ever happen. Whereas if we really do have this kind of post-apocalyptic world, or at least a scenario where we come to a head with the amount of deficit spending that we have compared to the amount of backing that our currency actually has. Once we do come to that position where people realize, like a common person can realize, like, wow, we screwed up. This is not sustainable, and we need to figure out how are we going to fix this and how are we going to move forward. In that world, in another Great Depression kind of era, it may prolong how long it takes for Bitcoin to take over and to serve its purpose as a global reserve currency. However, it could cause it to also happen like overnight, like what we saw with Bretton Woods. In less than 2 weeks, they totally upended the global economic system. A bunch of people met in a room, and in a couple weeks, they come out and say, this is what's going on. Now your currency is backed by US dollars, which isn't backed by anything, so in a couple weeks, the world can change drastic economic policies. However, for that to happen, you really need to be in a position that is not good. It is downright scary. That people are really worried about the future of their economy. If we are in that environment, hyper Bitcoinization could happen. However, is that the best way to proceed? That I really I don't know, and I'm I don't think anybody really does. But it's very, very interesting to think about.
Right.
I mean, the failure part is, when I first started trading, I learned more by failing. So like what you're saying, if we fail, we're going to learn so much more by actually getting a failure. So I kind of can see that.
I couldn't agree more.
I would rather see that. I know it would be horrible, but I'd rather see that than the other side. Just to work things out in a better way. But just my thought.
Right.
Absolutely.
So,
next take two.
Yeah, with that said, Socrates, you talk about Bretton Woods, and what's very interesting is an event just happened recently. A lot of people are not talking about it on crypto Twitter. I don't think a lot of people are talking about it, period. And I was trying to quickly find the article, and I couldn't find it. But I'm not sure if you're aware of this, and again, it was not one organization that decided this. It's a group of some of the top, I think Coinbase was there. One of the banks was there. A person from one of the banks was there. It was, I think, like 10 folks got into a room and they talked about clearinghouses or setting up clearinghouses for cryptocurrencies. I have to find the article, but I was wondering if that was a similar event like Bretton Woods and that was taking place. And there are people that are working on trying to determine what it could look like if we were to move to a complete digital asset economy and the whole 9 yards. But I don't know if you were aware of that or familiar with it at all.
I'm not aware of that, and I would definitely be interested to look into it. But I definitely think that that's occurring. Like I'm a conspiracy nut. I'm very easily convinced that if there's money to be made, then there's a conspiracy going on. And I really do think that these conversations are already happening with world powers, that there are people who are in charge of major economies that are getting together, that are having these discussions of, are we going to embrace Bitcoin? Are we going to do everything that we can to shun it? Are we going to come together as a one global economy? Do we need Bretton Woods 2.0? I'm very confident that these conversations are already happening and that they are already laying the groundwork for the future. That those people aren't dumb. The people who are leading world economies and countries are not dumb, and they understand that there's a very decent chance that we've got another big recession around the corner. You'd have to have your sand to not think that there's any chance of that happening. So if you do believe that is likely, or at least somewhat likely, then it would be very beneficial for you, people that you represent, to already be preemptively having those conversations and kind of preemptively making some moves to position yourself for that sort of outcome. So yeah, I would be very interested to look into that article, and I definitely do think that these conversations are already happening.
Okay, yeah, I found it. So it's from Bloomberg. It was on April 24th. Crypto's long road to acceptance may have started here. In the wake of the 2018 crash, 24 traders gathered to plan its emergence as a new asset class. Step one, a clearinghouse. So this article talked about this in detail, and it was this gentleman, Ho Long Ling, who actually called this meeting together of these folks. They met in Singapore at a resort, and they were talking about this. So I'll definitely post this to something for you to check. Like I said, I'm shocked no one on crypto Twitter talked about this. I'm shocked no one really brought this up. No one really debated. No one said anything about it. And I'm like, did everybody just see what just happened there? I'm like, or was it just me? And so I think it was just me. because nobody's talking about it. So it was a very interesting situation.
Yeah,
Well,
what I'm hoping
I think a
that-
lot of people.
Oh, sorry. Go ahead.
I was saying, I think a lot of people don't really understand the implications, behind that, and how it would affect things. I just want to make 2 points. I think the is a Bitcoinization. I'll make sure I'm saying it right. I'm a little pessimistic on it because I think there are already situations in the world, especially if you look at like emerging market countries and hyperinflation regions and things like that, where hyper Bitcoinization should be happening in maybe in a regional location, and it's not. You're seeing a lot of government resistance towards it, and you're already kind of seeing it play out what it could be like in the future for Western economies, let's say. My second point too is this idea of Bitcoin becoming a reserve currency, I'm skeptical on, mainly because if you look at gold, who are the largest holders of gold, right? The governments throughout the world. And Bitcoin, unfortunately, if you look at, if you factor in what the current supply is, okay, you take out, what was it, like there's estimates that maybe 15 to 20% has been lost forever, right? So that, that could bring us down to, around that $15 million Bitcoin range. You take Satoshi Nakamoto's holdings, right? That brings us down to about 14 million, Bitcoins. You start to get to a point where it's going to be very difficult for governments because they're going to want to control the supply, right? They're going to want to be the biggest bag holders of Bitcoin. And it's gotten to the point now where it's going to be very difficult, right? Unless they're buying at OTC and we don't know about it, it's going to be very difficult for the governments to control, the total supply of Bitcoin. So I don't know. I'm kind of skeptical on this whole hyper Bitcoinization thing because I think it should be happening right now in emerging markets, and the supply doesn't make sense to me. So right. I don't know if Socrates has an opinion on that, or.
I guess I just have a question for you in that if you do not see the future of Bitcoin as a reserve currency for the globe, what do you see Bitcoin as?
Right now, I kind of agree with Murad's definition of what stage it's at right now, which is a digital collectible. And
I guess in the long run, in the next 30 years, 50 years.
I don't know if it's going to be around. Okay. 30 years, and if it is, it could be trading at such a low price nobody really cares, right? I think there's still a lot of uncertainty on where this could go, and so I brought this up to Brian. He kind of made fun of me for it, but I'm going to bring it up again. I think the best way for Bitcoin to survive is if it forms like a partnership with a trusted, well-known real asset, tangible asset. And I could see, a partnership between like Bitcoin and gold, let's say, Bitcoin's being backed by gold in the future. Whereas let's say if fiats really start to fail in a doomsday scenario and we need a digital currency that is backed by a scarce resource that is mainly government owned and trusted, I could see maybe some sort of a digital token or coin on top of a gold, reserve, being a future, currency that we could use as a peer-to-peer or, whatever it is, transaction. I don't know. That's my thoughts. Yeah.
I definitely see what you're saying. And I used to think the same thing in terms of Bitcoin was backed by gold to be the greatest thing this world's ever known. I don't necessarily think that anymore. And the reason why I'm so confident that Bitcoin will become a global reserve currency, whether it be slowly and surely or through a hyper process where it happens very, very quickly, is throughout history, 100% of fiat currencies have failed. There has not been one fiat currency that has survived. I think the average lifespan is like 20 or 30 years, something like that. So right now we're living in a world of fiat currencies that are backed by fiat currencies. It's this house of cards that it just absolutely cannot continue to be built upon in my mind. In my mind, there's just no way that we can continue that fiat currencies are going to be around in 1,000 years, in 500 years, in 100 years. In 100 years, I don't think fiat currencies are going to be around. And if that's the case, like history has shown us is the case, every single time a government takes control of their country's money, then we need an alternative. And the alternative has always been gold. Gold has been the most sound money that this world has ever known. It has worked for a multitude of reasons for thousands of years. It's durable, it's transportable to a degree, but the main thing in my mind with gold is the stock to flow ratio. When demand for gold increases, it is very, very difficult to increase the supply. Whereas with almost anything else in the entire world, that is not true. Anytime demand increases, supply increases right alongside it. So the stock to flow ratio of gold is what made it money throughout humans' history. And it is very, very good at being hard money. Gold is the hardest money that the world has ever known until Bitcoin was invented. And Bitcoin is just so far superior to gold in every aspect that gold is now redundant, essentially. I mean, I still own some gold, but it's only because of how I expect the market to react, not because of any value proposition that I see in it. So essentially, for me, if Bitcoin backing Bitcoin by gold is entirely redundant. You only need one thing that is scarce and that is provably scarce and that we know for sure is scarce and that supply cannot be increased when demand is increased. So that is the main reason why I think gold has been money. And Bitcoin solves all those problems, and it does it so much better. That to have Bitcoin and gold as kind of this thing that's combined together, that doesn't accomplish anything that Bitcoin can accomplish by itself. The only thing that would accomplish in my mind is making senior citizens and boomers feel more comfortable with they at least have some gold in their hands, opposed to just having to trust that their Bitcoin is out there somewhere. So combining the two, I do not think offers the benefit Bitcoin can't solve itself. Anything that gold can do, Bitcoin can do, and it can do much better. So in my mind, I think that Bitcoin will be around in 30 years. I think that it will be, if it is, then the world will eventually start to realize that it is the best money the world has ever known. And the societies that start adopting it sooner will start recovering faster from if it's from a downfall, or they'll start thriving more if there is not that sort of crash environment. So that's what I think about the.
I'm going to jump in here. One thing that I'm hoping that's happening behind closed doors, like they're doing, I'm hoping that the Keynesians and the Austrians are getting together and punching the shit out of each other and say, hey, we have a new economic thinking. We have streaming money. People are putting their faith in math, not humans. We have to figure out a new economic thinking on how this is going to work as a reserve currency. Because I'm with you too. I think there's a reserve currency 30, 50, 70 years. I don't know when it's going to happen, but I feel like that's the evolution or the revolution. You can call it either one you want. But I think that's what I'm hoping is happening behind closed doors is, all right, we see this new streaming money, store of value, whatever you want to look at. It's a whole mind-boggling way of thinking economically. And that's what I'm hoping is happening behind closed doors.
Well, I tell you what's happening right now. Bitcoin might be breaking 5,500 here soon. So you guys better get to the charts.
Uh-oh.
To the downside?
5,500 to the upside, brother. Come on.
I know. I'm just.
We go to 2,000.
Could I just bring up one other point before we get into the charts? One, we're asking people to rewire their mysticism or ways of thinking about gold the way we've been thinking about it for thousands of years. And so, that's one resistance that I see. The second, the one issue I have with Bitcoin economics and the way the one advantage that I see with fiat over Bitcoin is that in times when you have lower demand, you can't reduce the supply of Bitcoin, right? Bitcoin has a fixed inflation curve, right? And you can't reduce the supply of Bitcoin. And that's, I think, the one advantage that fiat has over Bitcoin is that, you can reduce the amount of money circulating in markets to stabilize, the dollar, whatever fiat, you're talking about. Do you see any concerns with that, Socrates, in the fact that, and that's the reason why we have these crazy kind of capitulation events, happening, or these major drops in Bitcoin, is that you can't reduce the supply. It's fixed. And that's the one advantage you have with fiats.
That's a very interesting point. However, I just kind of view it differently. I view that our current economy has been based on a Keynesian foundation, and that when you're on a foundation that is sand, that you're going to have to come up with all these sort of solutions to fix a problem that is in the foundation. So the way that our government currently manages our monetary supply and manages our economy, the only reason they do anything they do is because of Keynesian economics. Anybody in those positions of power fully buy into the idea that money supply is the only thing that really matters, and that you just increase the money supply and let things go up, and then when things are coming down, well, then you pull the other lever and decrease the money supply. So I kind of view the as taking medicine that is preventing us from really healing. It's like we're just putting a bandage on, when really all we need to do is rip off this bandage and take some medicine and deal with the fallout and then move forward. So for me, I don't view the ability to decrease money supply as necessarily an advantage of fiat. I more view it as a side effect that shouldn't really exist in a world that is based on a sound money foundation.
Yeah, people's mindsets will change when they're standing in the breadline.
It's hard to argue at that point.
Well, I mean, we just don't. We just haven't ever had that. I mean, everyone's got their cable TV and they're all comfortable until they don't have it. That's when they start thinking, okay, now what do I do? And I don't think anybody is ever thinking that way at all. And I think it'll take a breadline for a lot of people to switch their psychology over a little bit. I'm hoping that doesn't happen. I'm hoping that we can get to a reserve currency without a devastation. I don't want to devastate people. I want to see us grow in the right way without, bringing destitute and harm to people and all that kind of stuff. But
yeah, I really agree with you. And I think that we view it very similarly, whereas we don't want this big bad thing to happen that causes a bunch of devastation. Whereas we also kind of think that we realize that in our lives, the biggest progresses have come after the biggest failures. So like it's that kind of catch-22, whereas we kind of understand that devastation could be the best thing that really could happen in the long run, but we don't really want that to occur. We don't want people lining up in the bread lines. So I really do agree with what you're saying.
Cool.
Great. That was an awesome session.
All right, let's get.
What do we have next?
No, that's it. Except for some charts that Socrates might want to show, if he has any.
Yeah, I definitely got some.
I know we're an hour and 50 minutes into it, but feel free, man.
And we just popped over 55, so.
Very nice. I like hearing that. Yeah, I've got a handful of charts. I wasn't really sure how much time we'd have. I'm good to keep going. I've got a full beer and
I got
tomorrow because it's horse racing country, and here where most people don't even go to work tomorrow. So I'll be up all night if you want to go.
Yeah. Well, I can just share some quick hyperwaves really quickly to just show what we were talking about earlier, and then to also key people into some stuff that is currently active. So as I mentioned earlier, this was just kind of the original archetype that was drawn up. Are you guys able to see my screen?
Yep.
All right. So this was just the original archetype that was drawn up after this chart here. This was the silver hyperwave that occurred in the late 70s and early 80s with the Hunt brothers trying to corner the market right in here and seeming to do it very effectively. We see just a beautiful hyperwave pattern. We've got the 1, we've got the 2, we've got the 3, and then this 4 just goes as vertical as it could possibly ever go. I mean, it doesn't get any more vertical than that. Very small 5 and 6, and this was right where Tyler was selling in this mid 30 range, and he got out right before this collapse occurred, and that was the first time that he was able to use this theory, and it worked very well. We see this was the first hyperwave that returned to phase 1 and is also the shortest that we have seen since Bitcoin. So the other one that is extremely interesting and is perhaps the most important chart in my mind is this one right here. And that is the hyperwave that occurred in interest rates from the basically the 40s all the way up to 2000 and into the 2000s. So basically right in here, we've got this range that we had been in for basically as long as the U.S. has been around. This chart only goes back to 1900, but from about 2 to 5% is a very common range for interest rates when you have sound money. When you do not have sound money and deficit spending takes over and money printing takes over, then you start to see some funky things. So here from 1900 to about 1970, we see this range from 2 to 5%. Very good range to be in, very sound, nothing to speak of really. 1972, we go off the gold standard and we just break through this range very quickly, a little bit right before 72, and we sustain it on this pullback here. That establishes phase 3. Phase 4 takes us all the way up to 14% interest rates in the early 1980s. Absolutely unheard of by any metric in history. We've never seen anything like this, and that is often the case with hyperwaves, where it'll be so unique you've never seen anything else like it. So here we've got rising interest rates, which is bearish for equities. So from the 70s and the 80s, when these interest rates are going through the roof, what is happening with the stock market? It is stuck going sideways, and it is actually developing a phase 1. When this was going through the roof here, the S&P 500 was developing a phase 1. So now we break down here in 1982. That gets broken down, and we see that the interest rates fall sharply to about 10% and then spike sharply back up to 13%. So this was where Tyler wrote an article using hyperwave theory calling for a return to about 5%. He was viewing this as phase 1 right here. And he called for a return to phase 1 after this broke down right in here, which allowed him to make a couple sort of inductions, I mean to say. So he realized that falling interest rates should be extremely bullish for equities. And as this was breaking down phase 4, at the same time, the S&P 500 was exiting phase 1 and entering phase 2. Something else that is extremely interesting about this chart to me is this spike in interest rates, which occurred here, was very unexpected. It was out of nowhere, and it was violent. It spiked sharply when everybody was expecting these interest rates to continue falling. Well, what happened right in here in 1987? That was Black Monday. A lot of people will explain that through the new induction of quants and algorithms trading, and that very well could have been a big part of it. However, I'm inclined to think that this spike in interest rates also had a lot to do with it. The markets were turning very bullish. Everybody was going long, and everybody is right. And when this is happening, everybody's long in the stock market. And then out of nowhere, these interest rates spike, and that just wipes a bunch of people out. Black Monday happens right about in here. So I find that fascinating. Phase 7 is a smooth one, takes us all the way back down to phase 1. And this is where we are currently still below, obviously begging the question, what's going to happen when interest rates start rising again? A lot of people are wondering that right now. So
a
here,
quick question there, Socrates.
Yep.
On that chart that you just had, is the first hyperwave, is it always a flat line, or can it be a trend?
the first phase has to be horizontal. It
Okay,
has to be
okay.
stuck in a range.
Okay, that's cool. I was just kind of curious on that. Because when I mean, I've been looking at charts for so many years. I see so many Fibonacci possibilities, even on that line chart.
Yep.
So I'm gonna be diving into that for sure.
I'm excited to hear what you find out. That's for sure. So perhaps the single most interesting chart to me right now is the S&P 500. And the big question on our mind is, are we establishing phase 4 on this bounce? And there are a lot of reasons to believe that we are. And it will be very, very interesting to see how things progress from here. So as we can see, this enormous phase talking about, we've got the 70s and the 80s where interest rates were going through the roof. This is also when commodities were going through the roof. What had happened? We had just left the gold standard in 72. So the commodities started entering hyperwaves. Silver, we had sugar, I think cocoa. So there were a number of hyperwaves that occurred because the removal of the gold standard, as well as this stock market being stuck in a sideways range. So it is stuck here. Commodities are skyrocketing. Interest rates are skyrocketing. And the stock market is just going flat. Interest rates finally start turning around and finding a peak right as the stock market exits phase 1 here and establishes phase 2 here. That interest rate hyperwave entered phase 6, so that big bounce right around here. We see Black Monday occurs right there. And it's so amazing to me when you have these huge macroeconomic events that are unable to overpower a simple trend line. This trend line was established back in here, and it was all you needed to know to catch the bottom of Black Monday. And that happens again in 2008. So here we see the sell-off after the mortgage crisis. We melt down, we are selling off, and everybody's freaking out, running around with their hair on fire. And all that you needed to know was this trend line right here. It saved us on Black Monday, and right here in 2009, it catches the bottom basically perfectly. And when you get a big fall into a phase line, that is a good indicator that the next phase line is going to take off. You fall long and hard, and then you find support at that phase line. Now you should be on red alert to look out for the next phase to start. That didn't happen here. The same thing occurred, a long hard fall into the phase line, and we still continue phase 2. You know, it's not going to happen all the time. However, it did happen here. Long hard fall into phase 2, finds support, immediately establishes phase 3. And that's kind of what we saw here at the beginning of this year and the end of 2018 was a big sell-off from about 29 all the way down to 24, occurred very fast. We had this kind of head and shoulders type pattern. We had the moving averages all moving over. It caught support perfectly at phase 3 and spiked violently. This start to 2019, I think, has been the fastest start the stock market's ever seen. We've never never seen a move like this. So hearing that tells me that potentially phase 4 is starting. Phase 4 is very indicative of a move that we have never seen before. So going ahead and penciling in this line, there is still a question mark. When you're still establishing the next phase, you're really not very certain. You're waiting to see. You're needing to wait for further confirmation. So here, if we bust out, create a new all-time high, and then support a throwback on this phase 4 line, then it's going to be all systems go for the stock market, and the minimum that you really will see return in a phase 4 is about 2x, and sometimes it'll be 3 or 4x. So really, if this is phase 4 and it is confirmed with a pullback that is supported, then our target is going to be close to 6,000, probably in the $5,600 range. And furthermore, we would expect that to occur in less than 3 years based on the time relationships of phase 4 compared to phase 3 compared to phase 2. So this is a very, very interesting time for the US stock market to see if this thing really is establishing phase 4. If you can get into something that is at the beginning stages of phase 4, then you are in a very, very good position, potentially one of the best positions that you can find yourself in.
Hey, could I let me interject here? Another quick question. This is I'm just learning as I go here because it's kind of the first time looking at Hyperwave. Why? I'm not familiar on exactly the rules on what you draw, but the wave 3 or the wave 3. Why did wave 3 not end on the low in 2016 at 1,800, and then 4 is the next one up?
So
I don't know
that
how
is
that's just my observation. That's all.
No, it's a really, really good question, and it's a very advanced question that basically, when this was occurring right here, we thought that there was a very good chance that that was phase 4.
Okay.
So when this was occurring, we see this take off. Like, this is kind of a bubbly move right here. It's really going north at 90 degrees, and it also is taking off at a more steep angle than the prior phase. However, the problem is that the angle is very close. So often what will happen is that the price gets overextended from a phase line without establishing the next phase. So like right here, we got pretty far extended from phase 3, and it could be arguable that that was phase 4, and we really were wondering. It was actually being drawn just like that. And then the question was going to be, is this going to be phase 5, 6, and then we're in for 7? So that was something that we have talked a lot about in the chat group, and I've talked with Tyler a lot about as well. And it is reasonable that would have been phase 4. However, it's far from what would be expected. So that there's a couple kind of rules of thumb. Whereas phase 2, it always happens between 0 and 30 degrees. Phase 3 always happens between 30 and 60 degrees. Phase 4 always happens between 60 and 90 degrees. So right here, this angle, if we were to draw that and label phase 4, it's more of a phase 3 angle.
Okay.
So that is the main reason why I didn't want to label this phase 4, and I never was very convinced that it was.
Okay.
Was because of this.
When you talk the angles, do you guys apply Gann analysis at all, or is it just the angles that you've used from historical looks?
I know that Tyler is very familiar with Gann analysis, and one of the next books on my reading list that I already have here with me is The Law of Vibrations. So I have yet to get into that myself, so basically what I do in general will be just kind of drawing up right triangles to help myself determine the angles or go do a rise over run calculation.
Okay.
So that's how I've been doing it. And hopefully I will be able to complement that further with some stuff that I learned from Gon.
Cool. I was just curious.
Just Socrates, just one other question. So being that you're looking at the angles, you have rules when we move from one phase to the next, there's certain angles that the lines have to meet, right, in order to meet that criteria. What about as far as the amount, the rate of the capitulation, or the amount of the drop between, one phase to the next? Are there rules around that, or is it just angles? Does that question make sense to you? So when we go from phase 2 to phase 3, for example, that drop from 1600 down to 800 or 700 something.
Okay.
Do you have to have a certain drop between one phase and the next before you can move into the next phase?
No, not at all. And you prefer not to see it. You would prefer it to be more like, the closer that it sticks to the phase line, the better that it is in general. So if this thing had just stuck really, really close to this and then it started accelerating at a higher angle, then it becomes more easy to label the next phase. And it also just becomes more reliable. It becomes less of a guess. Whereas when they really get extended from the phase line and then have a big fall back into them and then a big rally off of them, now it becomes very difficult to determine, well, was this the next phase or was it not? So yeah, you don't really need a big minimum drop into the phase line, whereas potentially on phase 5, that's the one that ends the upside and starts the downside. Phase 5 potentially could require like a minimum drop. If you just smash into phase 4 and you return a ton and it looks like you're entering phase 5, but it doesn't drop hardly at all, that could be an indicator that your phase 4 was drawn slightly incorrectly, and that you really should see a significant sell-off in phase 5. However, I don't have like a rule of thumb that it needs to be 20% or something like that.
Okay, thank you for that.
Yep. All right, so we'll just pull up a couple more real quick. So just have a couple individual hyperwaves to look at, just to kind of see what's going on underneath the index, which is driving so much appreciation. A very interesting one right now is Boeing, and it has maintained its phase 4 despite the fundamental developments that we have seen lately with the plane crash and the potential bug in the software and all of that. So this has been very, very interesting to me to see if oftentimes the best entries into hyperwaves will occur after negative fundamental developments. Sometimes the negative fundamental developments cause a big sell-off, and that's the only way that you're ever going to return to a phase 4 to get a good entry. Like we see back in here, this thing was just going straight to the moon, almost at a 90-degree angle, and it almost needed some sort of impetus to stop that and to bring it back here for a test. So seeing a negative fundamental event in a positive technical environment and technical setup has me kind of sitting up in my seat wondering, is this going to be a good buying opportunity, or is this thing actually going to break down the phase 4? So this is definitely one that is fairly unique, and all hyperwaves are going to fit into a similar kind of skeletal structure, but they all will be kind of unique little snowflakes. So they'll have something that gives them their own characteristics. And right here we see how many times this thing tried to establish phase 3. Before it finally did. It kept trying to establish it, breaking down and returning to about phase 1, trying to establish it and breaking down, returning to phase 2. I said phase 1, I mean phase 2. So here again, trying to establish it, broke down, but find support at phase 2. That's kind of what we saw with the stock market in 2000. During that dot-com bubble, it had a phase 3 type of move that it was unable to sustain. It fell back, found support at phase 2, and now finally does establish that third phase. And shortly after that, just takes off and rips into phase 4. So this is one I'm going to be watching very closely, since this has had so much upside. This is one of the biggest hyperwaves we've ever seen. I mean, look at this thing starting back down below like $10, all the way up over 440. I mean, this thing is just massive. So once this does break down, I think it'll be a tremendous shorting opportunity. The first target would be
could that last wave or that last move to the upside be the start of a wave 5 or no?
So there's a couple ways I could answer that. So we have actually seen hyperwaves that have a fifth wave to the upside. It's very, very rare, but we have seen it where it doesn't fit into the archetype and it actually has 5 waves to the upside. So this is one of those that I was kind of thinking might fit that.
Oh, that's
category.
right. It's only 4. It's only 4 to the upside. I was thinking there's a fifth one. That's my bad. That's me not counting right. But go ahead.
No, yeah, you still could be right in the sense where some of them will just be so powerful and have so much momentum that they will just keep accelerating and keep advancing. And when this thing returned here to 300 and then just shot up to 420 in like less than a month, I was thinking that same thing where it's like, man, maybe this is going to be one of those where we have 5 waves to the upside. Very rare, but that was starting to look like that could be one of those. So yeah, that's.
But I was thinking 5 waves because of Elliott Wave. It was just in my head because it's 5 waves up.
Totally. If you have 5 waves going up though, what does the 6th and 7th look like? That would be.
We would expect the 6th and 7th to basically be the same, where it's a spike down and then a dead cat bounce and then a new lower low created after that. However, we wouldn't be as confident that it's going to hit the targets that Hyperwave says it should. So yeah, all hyperwaves do need to have 7 phases. If it has 8, that means it's not really a hyperwave. If it has only 5, it's not really a hyperwave. It still kind of might follow some of the same rules, but we wouldn't be confident in suggesting that necessarily.
Okay. Cool. Great.
All right, I got a couple more here. So this is a really pretty one. BDX, I believe it is Becton Dickinson and Company. Not even sure what in the world they do, and I don't necessarily care. All that I'm worried about is the technical setup. So we see a beautiful phase 1 occurring way down here, close to $1, well under $10. Breaks through and doesn't immediately enter phase 2. Instead, it just consolidates on top. That's entirely acceptable, and that will happen pretty often. Once we start making higher lows, we started making them here, that's when we can start drawing in this phase line. So this is a bit of a not the cleanest phase 2, but that's okay. Phase 2 is the least important of all phases. Phase 3 starts getting a lot more clean with these nice touch points, nice phase line that it's respecting. And then we see one of my favorite setups, which is like an ascending triangle that occurs on a phase line retest. So if we think about horizontal resistance, which occurred here at $90, and then a phase line holding as support, creating higher lows, that's going to give us this kind of ascending triangle looking setup. And that can be a great opportunity to enter. Anytime you see a complementary pattern occurring inside a hyperwave, that can be a very high probability entry. The 2 most common that I see are ascending triangles and cup and handles. Seeing those occurring within the 3rd phase or the 2nd phase of a hyperwave is a very, very big buy signal for me. So shortly
Socrates,
thereafter,
how long is that? I can't see the dates down below because of our boxes. How many years is that ascending triangle being built out?
Yeah, good question. So that started in about 2008, right around here. Here's 2009, and it lasts until 2013. So that is going to be 5 years of this building up and really going nowhere. So great question. And that is something that a lot of people are not comfortable trading higher time frames and having to wait so long for signals. And that is definitely fairly common for hyperwaves. They occur over long periods of time. You know, the shortest one's about 5-6 years. So we really are expecting these to occur 20, 30 years. And in that case, it might go 5, 6, 7, 8 years where it actually doesn't even go anywhere, but it still stays in a hyperwave and potentially paints a pattern that provides a really, really good entry. So yeah, this would have taken about 5 years to develop here and would take a lot of patience to wait for. But if you did, you were rewarded basically instantly by buying that breakout and holding on. It entered phase 4 very shortly thereafter and has been in it ever since. And right now, we have just tested it again, and we've tested it off a lower high. So I'm extremely interested to see what happens here. We've got the lower high, but it also looks like a higher low. So potentially we could see another sort of pattern develop, or what I'd really prefer to see is this just a smash out to a new all-time high and take off to the races from there. So this is one, anytime you see a hyperwave where the price is close to the phase line, it's time to pay very close attention, because there's a trade on the table either way. If this thing has a weekly close below phase 4, then it's a very high probability short that I would want to jump over as soon as possible myself. Whereas if it doesn't have a close below and it supports this phase line, then there's more room to the upside. So by paying very close attention to assets that are near their phase line, you're putting yourself in a position where you can go long or short depending on what happens. And I really like those situations.
Yeah, it's not as pretty, but there's almost a triangle on phase 2 on there too that you could have bought on the breakout there too.
Absolutely right. Yeah, and that is fairly common.
It's not as pretty as the other one, but it's definitely there.
No,
different phase.
You're absolutely right. I would absolutely agree.
You know what I love about these? You know what I love about these charts as well is you hear a lot of mainstream about Bitcoin being, the tulip bubble and blah blah blah, and all of these charts are demonstrating, hyperwave theory that Bitcoin isn't necessarily unique, right? We've seen these patterns repeat themselves many times across different asset classes. So this is really cool.
It's just Bitcoin did it in a year versus 15 years.
Right. Exactly. Right.
But yeah, no, I agree. Yeah. Either that or what you're saying is the stock market is just one gigantic bubble that's just going to crash.
Well, I am preparing for the financial revolution. All right, so here is a
that's the prepping part, right, of your bio, the prepping.
That's right. Yeah, I'm not.
Do you have a doomsday shelter as well, or is it just financial related?
I'm working towards it. I've got an RV that is my doomsday shelter that I hop in there and take off.
There you go.
That's awesome.
RV was a very important part of my plan to feel like I'm agile enough to make some moves if I need to. So here we've got a very beautiful chart that is just ripped off into a phase 4 that just looks incredible. So here we've got phase 1, real nice. Again, started back in the early 70s. Phase 2 lasted forever, had this massive crash in 2008, and this one didn't quite return to phase 2, found support above, which is extra bullish. Then we shortly thereafter take off into phase 3. We get this kind of flagging pattern here that occurred over about a year and found support at phase 3, and then it has just ripped off into phase 4. So this is one where I would feel comfortable labeling this a phase 4, and I would also feel comfortable buying it. It does, looking at a chart like this, it's scary to buy. It really looks like you already missed out. Whereas I do not think that is the case, because phase 4s will return 2x on the lower end. So my lower end target for this would be $340, and we are only at about 200 now. So that leaves a lot of room to the upside. And at the rate this thing is moving, it could get there very, very quickly. So this is one that I find very intriguing moving forward over the next year or two, and seeing things like this underlying tells me that the stock market is more likely, it increases my likelihood in thinking that the stock market could be entering phase 4 itself. When you see a lot of underlying stocks that are just entering phase 4 and they're doing it in a very strong way, well, that tells me that it's more likely that the overlying index is going to follow suit and do the same thing. So that's what I've been focusing on, is paying very close attention to the S&P 500 to see if it's potentially entering phase 4. And to help me to determine that, I'm looking at some of the underlying stocks and finding the hyperwaves in there and seeing if any have recently entered phase 4 like we see right here. And one thing that I've been very blown away by is just the amount of hyperwaves that are currently active. If you just pull up the S&P 500 index, and all what stocks are in this index, and then you go through alphabetically and just look up the stocks and type into trade, you will start to realize, like, holy shit, a lot of these are hyperwaves, and that has a lot of implications.
Could I ask you a question here? So when you're looking at, I think that's a great point. So when you're looking at the constituents of the S&P 500, and trying to identify hyperwaves within those, are you finding that the larger weighted constituents are following the hyperwave to a T more so than like the lower weighted ones, in the index? Is there any kind of relationship there?
What I'm seeing, and maybe I haven't looked into it quite with that perspective, but what I'm seeing is that a lot of the market leading stocks are forming the hyperwaves. So a lot of the larger cap, I guess, the larger weighted stocks and the ones that are driving the price action are forming this pattern. Like Amazon is a perfect example. It's in a textbook hyperwave, and it is leading the NASDAQ into a hyperwave itself. Pretty much all the indices are showing this pattern. The Russell 2000, the Value Line Index, it's pretty much across the board, which is kind of crazy.
Are you seeing it? Are you seeing it in the global indices as well, like the Nikkei and some of the other ones?
The Nifty 50 is one. The New Zealand index is another that come to mind. But there aren't. I did go through all the indexes in the world, the major ones anyways, and I was expecting to find more than I did. So the Nikkei is not and I don't think the FTSE is. So yeah, I think it's just some smaller kind of emerging markets. If you look at New Zealand, it's like one of the strongest markets in the entire world right now. It's insane how straight up it's been going.
Right.
And the Nifty 50 is in a big one as well.
You know what I think would be really interesting as well is, a lot of crypto maniacs don't think about, everybody says, money is what makes the world go round and round. It's actually debt. Right? Like when you consider the size of the debt markets, the fixed income markets versus any other market that's, invested or traded on, debt markets far outweigh anything else, right? And so it'd be really interesting to see what some of like the bond indices are doing, like the Barclays, the Barclays U.S. Ag. Some of the major fixed income, like emerging market bond indices that are out there, like if there are any kind of like hyperwave signals there, because when you think about when we're trying to identify recessions and stuff, fixed income guys are kind of the best guys in terms of timing market cycles, right? Because of the nature of what they're trading. They're looking at inflation and interest rates and government policies and things like that. So they tend to be kind of on the forefront of projecting what might happen in the economy. So
very interesting. I never thought about it like that. Definitely have to give that some thought. So I'll share one more chart very quickly to round us out with some crypto action. And something that I have been following very, very closely lately is the relationship of Bitcoin and altcoins. And one of the things that could happen, which really makes me more confident that the bottom is in, is if we start to see Bitcoin pumping and alts not following along, either the USD pair kind of staying behind, getting stuck in a range, or the alt BTC pair actually dumping. For most of the last year or so, anytime that Bitcoin has pumped, the altcoins have pumped even harder. And that is something that I think is going to continue as long as we are in a bear market. For me, one of the biggest signs of a bottom in this market will be Bitcoin pumping and alts selling off versus Bitcoin. I remember that happening very vividly before the alt seasons of 2017. We got these big alt dump offs where Bitcoin would rally and the alts would just sell off and sell off and sell off. And that's what I would expect to happen here. I'm not necessarily convinced that the alts will just sell off and go to zero. Some will. I think there will be a lot that are left over. However, before I am confident that we have found a bottom, I want to see Bitcoin going up and altcoins falling during the same time. And we have just started to see that over the last month or so. Now, these are the USD pairs, so this is even more pronounced than I would expect. Like, you almost never see Bitcoin USD go up and ETH USD go down. They're so married that it is very rare to see one go in one direction and another go in another direction. When that does happen, it is a very, very important thing to pay attention to as far as I'm concerned. These are the things that just kind of happen slowly and surely, and everybody that isn't paying attention, they don't realize what's happening until it's too late. Whereas when you start to see these minor divergences, these shift in trends, these changes, it's time to pay very, very close attention as far as I'm concerned. The first thing that really jumps out at me about Ethereum is how weak its pump was at the beginning of April. We see Bitcoin just mashed. It mashed right through and it has stayed strong. Whereas look at Ethereum. I mean, this is just a very, very different chart. So different that I can't remember the last time I've seen ETH look this much different from BTC in terms of the USD pairs. So this thing, we were marking the same kind of horizontal level in blue in terms of this is the horizontal resistance it consolidated under for the beginning of 2019 and the end of 2018. ETH barely made it out of that range and quickly retraced back to it to retest it. Bitcoin did nothing like that. It just smashed through. And then Ethereum, it did create a new, it kind of found support here and did create a new high, but then it did nothing. It did absolutely nothing, kind of formed a head and shoulders, and it's been testing this boundary ever since. It never really got through it. And Bitcoin, look at how
definitely
far
lower highs for sure.
Absolutely. Now we're creating lower highs and lower lows, and we're back below this boundary. For Bitcoin to be where ETH is, Bitcoin would have to be under $4,100 right now for it to be in the same setup as ETH. That's a huge difference. Yeah. Like
I read the article that you had this chart in, or you had a couple of them because you had some other markets that were going down too. What I know I'm not a fundamental guy and I really don't care that much, but I was just kind of curious of what do you think is doing it? The first thing that came to my mind was I remember a while back that a lot of companies were selling ETH to be able to pay for their businesses. Could that still be the case? Like they're selling out their ETH because they got to make their bills?
That definitely could still be the case. I remember seeing something that, this is basically off the top of my head, so take it for what it's worth. But I remember seeing something that a lot of ICO ETH holders were still holding a huge portion of their ETH. And I don't remember where this was, and it's just whatever, take it for what it's worth. But I remember seeing that there are still a lot of big bag holders of ETH who had ICOs. And if that is the case, then there still could be a lot of people who are selling, like they were looking at ETH at like $500 and planning their business expenses based on that, and never really thinking about these low prices of 150. And now that they're getting here, they're kind of freaking out and selling to be able to stay afloat. That absolutely could be the case. However, I think it's something else right now, and I have been waiting for something like this to happen over the last couple months, ever since the Constantinople hard fork went through. I have been very bearish on that hard fork, and I was expecting an immediate reaction, especially at an ETH BTC pair. I was shorting it, and I was expecting ETH BTC to dump after that thing went through. Everybody thought it was going to be bullish due to the reduction in miner reward. I viewed it as very bearish, primarily because of there is not one proof of stake coin inside the top 10 market cap. The market refuses to value proof of stake coins highly. And I agree with that. So when they finally went forward with this transition towards proof of stake, I have been having a hawk eye on this thing, wanting to short it. And now it's really starting to look like it's the time to do it. If this really does resist below this blue line, then I've already started to build some shorts. But anyways, that's what I think the main thing is that it's moving to proof of stake, and the market is gradually going to be valuing it as such. I would expect to see ETH outside of the top 5 market cap coins before the end of this year. And that is entirely based on that hard fork.
Yeah, no, that makes sense. I mean, the first thing that came to my mind was the whole ICO paying bills thing, but what you're saying makes sense too. I didn't give a lot of thought into it. I just saw the divergence between the two, which I thought was very interesting.
I think it's very, very interesting too. And the ETH BTC pair is dumping, and it's doing so in a big way. It's formed a massive descending triangle over the last about year and a half. And the huge area of support is 0.03 and 0.025. We're right now breaking down 0.03. If that happens like it looks like it's going to, then it should return right to 0.025. And if we retest that area, I really don't think it's going to hold. If that area breaks down, this thing is really going to start moving and in a big way south. So yeah, it's something that I think should be paid very close attention to is this divergence here, as well as the ETH BTC pair testing a major level of support. I think for me, what the trade is moving forward, again, not financial advice, I'm just telling you what I'm doing. I think looking to long the next pullback on Bitcoin, buying spot Bitcoin from 42 to 47, and hedging with shorting ETH USD and ETH BTC. I've already started building my ETH USD shorts and ETH BTC shorts. So if this Bitcoin does pull back to the 4,600 area, ETH should be dumping, and it should be down around the 125, 100 area. So I'm starting with an ETH short, and then I'm going to be buying spot Bitcoin. And I feel like that's going to be a really good trade to not only get some long exposure to Bitcoin, but to be basically more than fully hedged and actually be net short the market and have an opportunity where potentially both positions actually turn a profit. So that's what I'm looking at here moving forward over the next month or so.
Cool. Well, maybe that moves us into a segue of projections into next week for BTC.
Can I just say one thing?
Oh, go for it.
Especially for Socrates, do you mind keeping that the ETH and the BTC chart on? Because a lot of our viewers here, when we've looked at our kind of analytics on the channel, we have, a younger demographic that is watching this channel. And the thing I love, the way Socrates analyzes markets and the way he charts these markets is awesome. He doesn't have 50 different trend lines going every which way. He doesn't have, this crazy multicolor scheme that's going on. He doesn't have 50 different trading indicators, right? It's clean, it's simple. And this is exactly what you want to do and what you want to see from a professional chartist. It's very clear looking at this without even Socrates explaining it, what the patterns are signaling, where the resistances are, where the supports are, and where the trend could be going. So I just want to emphasize that to our viewers. A fancier looking chart doesn't necessarily mean you're going to get a better signal or you're going to trade better. So just want to point that. Thank you.
Appreciate that.
Cool.
I definitely agree. Thank you for that. All right, I will hop off screen share here.
All right, who's doing the first projection? Do you want me to go, or you got it, Bobby, or what do you want to do?
I'm not confident because I've lost the last 3 weeks. So why don't you go again?
All right, let me share my screen real quick. Now I'm afraid to show my screen because I got a lot of lines on here. It's gonna make me look like.
No.
I'm just kidding. No, I totally get your point though. I totally get your point because a lot of people put just a whole bunch of shit on there and it doesn't make any sense whatsoever. Anyway, why is it not sharing? Here we go. There we go. Let me know if you can see it. Can you see my screen?
Yep, I can see it.
All right, cool. As you can see, I got a shitload of lines. No, but
but they make sense. Your lines make sense.
No, I know. I'm just teasing. No, actually, what you said makes absolute point. When I first started trading, I felt like I had to do a whole bunch of stuff, and over the years, I've become more simplistic. And you really don't need that much if you just have the experience of what you're looking at. All right, for this week, I know this little channel in here. Let me blow this up so you can see what I'm looking for next week. Couple of things. I really like the ADX on the increase here, especially with it increasing. Or actually, the ADX itself is kind of leveling off, but it's leveling off in a zone that's still a strength building zone for trend. So I like that. At the same time, on the near term, the price of Bitcoin is breaking through this near term Fibonacci level of 53.87, which I wanted to see at the same time that the ADX and the bullish directional index indicator, the green line here, all of that was signaling a correction in the market, and then a nice bounce because the positive directional index did not cross down through the bearish, the red one. So that with the trend breaking resistance at that 61.8% level, I like all of that. I like the way the RSI didn't dip down all the way to the support level that I was watching. All of that together, my call for next week, I think we're going to actually make new highs. I think we'll be above 56.50. I think we'll go to the top of this channel. So I'm going to say around 57.40, 57.50 as the area where there's going to be a lot more key selling interest in the market. So I'm going to say where we at right now, 54.40. I'll say 57.40 as a high over the next week. That's my call. That's my deal for next week. So
Nice.
That's a good call. It makes sense based on what you drew there. I don't personally have a chart. I've been moving the last 2 weeks, so I don't have anything prepared. But so I'm going to piggyback off of Brian since he's been the winner the last 2-3 weeks. I'm going to concur on what he's saying. Brian, do you mind bringing in the extended Fibonacci levels, like above the 100% on your chart, if you still have it up?
On this particular one?
Yeah. Because I'm curious where 6,000 lies and 6,500.
Well, how far? I mean the extension point where the
like where does the like the 161.8 lie at the 124 or 127? And
yeah, I put in the 127. Anytime you have a new high, the 127 is going to be the one you really want to look at first.
Right.
But if the momentum is really strong and it pushes through that, then the 168 will be one to really look for. And then I'll double it and put the two in there too.
I don't see the chart.
Oh.
Where does the 127 sit up? There it is. Okay.
Yeah, I'm
so
blowing it up here.
37. All right.
Yeah,
so
I just
I'm
added
gonna.
some extensions.
Actually, I want to. Go ahead. Sorry.
No, I mean if you just look off of this leg and if it makes new highs and it breaks above this, these highs here and gets above this channel, the 200. I mean, you're in this area of order block back here, but this was the start of the wave here, which was 65.11. So if this breaks out with a lot of momentum to the upside, I wouldn't be surprised to see a move to 6,000 to 6,300, but I think it would be a nice spike. But there would be a whole bunch of selling interest out there. Everyone and their brother is thinking about selling in that range. So if it spikes up to that range, that's when I think I'm not going to look at this thing until, I mean, I'm going to be looking at it from, if you lay out a Fibonacci, here, let me pull it up real quick. If you put a Fibonacci just from I can't messed up, but I'll put it in rough. If it goes into around this range, just say it gets up to 6,300. We're looking at that 4,300 range. That's a 61.8% of the retracement back. That's going to be my area of buying after I sell it when it goes to between 6,000 and 6,300. But I don't know if we'll get there next week. That's why I think we might get to that 5,750 area, 5,800, and we might hit Socrates 5,800, and he'll sell the shit out of it, and then it'll go down to 4,200.
Yeah, I think based on what we're seeing on the ADX, RSI, and stochastic, I think.
Yeah, they're showing nice signals for sure.
Yeah, I'm thinking this next week, there's definitely a chance we can get to that 127, so at the top of that channel, and that would be a good place to put in a short. So. Yeah.
So yeah, the 161 is at 6,075, and if you just do another wave of the exact same distance, you're looking at 63.38. So those are the two prices on the extension there.
Okay.
But I would actually look at this 127 as a key reversal area, so it could pop up here and then reverse. So really watch that 127 because that's anytime there's an extension of a new high and momentum doesn't build. You can see a lot of selling interest come in at that point. So definitely a mental trigger area for sure. So that's
there's a bit of divergence that's happening, right? Obviously on the RSI, and I imagine we're probably seeing it on the stochastic as well.
Yeah, especially if we get up to this 127 and this RSI doesn't make a new high and get that divergence there, that could be a sign too. But we'll have to see how that works out. Cool.
All right. Well, I give mine. I don't have any charts. Like I always tell y'all, there's no charts here for me. But it's funny. So Crypto Manran on Twitter, he tweets out an hour ago, "We're in a bull market. I repeat, we're in a bull market. This is not a drill."
Did he give a time frame? Is he talking the hourly chart?
No, so based on that, and then based on CryptoDog, so CryptoDog said 8 minutes ago, we're at a resistance across the board. Something is going to give in soon. I'll be honest, I'm a little worried about the alts. Dominance needs to reverse right here, or we're about to see ratio pairs melt down. And last but not least, the news that's recently come out that I think is causing this little run-up. Fidelity says institutional investment in cryptocurrencies likely to grow. Crypto platform backed use the bear market to accumulate digital assets. So with all this momentum going, this is going to be my call for next week. I think we could possibly crack 6. So that's what I'm going to say. I'm going to say that we're going to stay in this little, we're starting to create a little channel. We're going to stay in that channel. We're not going to drop down. We're either going to keep going sideways or we're breaking 6. That's my call.
All right, cool. All right, Socrates, you get to join in.
All right, I'll throw on the screen share, get a chart pulled up here, see what we got. So, not sure why that isn't coming up. Give me a second here. It must be up somewhere here in the background. All right. Nope, that's not it. Son of a gun. Well, while I am trying to figure this out, I will talk through what my thoughts are. So I have been licking my chops for selling at 5,800. I've been looking at that area for a while now. And I was, like I said, publicly had called for this bounce. And it looks like I'm going to have to just pull up a new one. And I was also longing down at support. Unfortunately, I didn't hardly make any money on that deal because right before we broke out, I exited and was mostly due to seeing the long short ratio at extremely unsustainable levels is what I thought. So I got scared out of my position very shortly before we pumped up. So that was unfortunate. However, I think I might be able to make that up by shorting up in this range. So essentially what I am looking at is going to be the moving averages along with this channel that we have started to form. So we notice that price almost got back to test this 200 EMA on the 4-hour chart. That was where I was watching very closely to see if we create new lows or if we find support from this area. We did find support. However, like I kind of mentioned earlier, we're coming up on this massive area of resistance that pretty much everybody can recognize. Seeing these volume profiles tells me that we are in this range right here of about 4,000 to about 63 or so. And that is what my most probable outcome is a little bounce here and a return down to this area in here. So if we're just going the next week, what I would be expecting is very similar to Fibbo Swanee, and that would be a bounce right here. And that should find resistance right here in the, I'm looking 56 to 57. I'm starting to think that if we do get to 58, it will just be kind of a wick. I think that we will spike down very sharply from there, and I will expect this channel to get broken due to the overwhelming amount of supply in this area. I think that reaction should break down this channel, and it should also break down this 200 EMA on the 4-hour chart, cause that to roll over, and then eventually get back down into here. So for the next week, let's see at this angle we're going. That's only 2 days away. So I do think that in 1 week's time, we should test 5,700 and then also fall back down below 53. So that would be my call.
Cool.
Great call.
Awesome, guys.
Yeah, one thing that I kind of noticed on that channel, I'm going to show you the chart real quick. If this is a channel, you take the distance here. If this goes up and comes back down and breaks, I don't know where it would break, but if it broke anywhere, anywhere in this area, it goes down to that 61.8% level off the distance of the break itself. So that kind of validates a nice move if you're measuring it, just measuring the break of the channel. And the reason the arrow is a little bit longer here is because it's on a log scale. But
Okay.
I don't know where that will be. But if it's a really sharp one and it comes down in the next week or two, that matches up pretty nicely. But I don't know. You showed that channel, and I thought about that, and it matches up with that long. But that's assuming. Wait, hold on here. Hold on. That was assuming that high. So let's go to here. So I am wrong. I take that back. Yeah, it's not as close. But it's still around that 4,300. So that you're looking at. So that makes sense. And it also makes sense on my Elliott Wave, because that's where my fourth wave is. Yeah, get up to 3, come back to 4. So we'll see.
That'd be
All right,
Wow.
cool.
Yeah, I would be very surprised if we get over 62 on this run up, but I've been surprised before. But I would definitely not think that that's going to happen.
Oh, that would be outside the realm of thinking at the moment, but you never know. Like you said,
Never know. That's for darn sure.
It's crypto. It's crypto.
Guys, I really appreciate you having me on. Hopefully, we'll be able to do this again before too long. In a couple months, I think things are going to be a lot more clear. 2 or 3 months down the road, I think the environment's going to be a lot more clear, and kind of sitting on our hands, or at least waiting and preparing until then, is a very, very good option if you're not feeling overly confident in the direction, such as myself.
Yeah.
Yep.
No, we appreciate your time for sure.
Absolutely.
Yeah.
Definitely. So, yeah. So I guess maybe we should wrap things up here. We're getting close to 3 hours. And
Yes.
Again, Socrates, I want to thank you for taking the time to speak with us. I've been ranting about you to Paul and Brian for quite some time. So I'm personally really excited that you decided to come on to the show. I really think you're going to be, the face of TA for cryptocurrencies, and especially Bitcoin going forward, as more people discover you and hear about Hyperwave. So I just want to tell everybody watching, if you're interested in Hyperwave, definitely follow Socrates on Twitter. He's got a great TradingView account as well. Follow Tyler and Leah over at Lucid Investments. I'm sure they're going to have additional webinars in the future to discuss Hyperwave along with Socrates, and additional training webinars. So be sure to check out all those resources. And yeah, great show, guys. And thank you for the time.
Thanks.
All right. Thanks all.
Absolutely.
Peace out.
All right.
Thank
bye.
you.
All right.
All right.
See you later.